technologies. But before we move on to that, let's take a quick check on how the markets are doing. Well, not a very good day for the markets today. The markets, both Nifty and Sensex are at day's lows. Nifty is down around 0.9%, almost 1%. Same with the Sensex. Sensex is also down around 0.9%. If we can quickly pull up what is weighing down the Nifty contributors, well, something that's really weighing down the Nifty today is M&M, RIL, SBI, also L&T, ICICI Bank. But something that's keeping that momentum and pulling up the Nifty is Maruti, Britannia, Titan, Grasim. So a couple of FMCG names there. Let's also quickly pull up the broader markets. The mid cap 150 and small cap 250, what they're doing exactly. Well, the mid cap 150 has taken a hit. They're doing worse than the benchmark indices. It's down around 1.3%. Small cap 250 is also in tandem with mid cap 150, down around 1.3%. So the broader markets are doing worse than the benchmark indices. Now, let's also see what's happening in the sectors. Nifty metal is something that is really under pressure, and this is on the back of copper prices and aluminum prices under pressure, including steel prices under pressure. All sectors in red today: Nifty auto, Nifty media, Nifty metal, all down by 2%. PSU banks down by 1.5%. Let's quickly pull up what's taking a hit in Nifty metals. If we can quickly pull up the Nifty metal contributors today, well, there you go. Just a couple of names in green, but Hindustan Copper down around 4.8%, SAIL down around 4.3%, NALCO down around 4.2%. But something that's really doing in these kinds of market today is RVNL. Despite the markets being under pressure, the stock has seen a significant upsurge post its winning of order of around 203 crore. The stock is up 6% right now. It did touch an intraday high of almost 10%. Let's also quickly pull up Raymond. Raymond's valuation for the realty demerger came in today in an MOSL note, of course, and they're saying that the valuations for the real estate business is around 8 times its FY26 EV to EBITDA estimates. The stock is doing well, up around 2.6% despite the pressure in markets. Let's pull up something like Marathon Next Gen Realty. The company did come out with its Q1, and it has a pre-sales value of around 214 crore, and it's down around 10%. The stock is under pressure, down around 5.6%. Let's also quickly pull up what Delhivery is doing. Well, there was a block trade in Delhivery, 23.4 million shares, almost 3.2% equity changed hands there. There you go, Delhivery is down around 0.6%. Lastly, let's also quickly pull up Delta Corp. They came out with their Q1 FY24 results, and revenue is down around 30%. Margins have taken a significant hit from 37% to 17%, and net profit is down around 68%. The stock is under pressure, down around 4.5%. But let's shift focus to Chamanlal. Chamanlal Setia exports. Yesterday we discussed that rice stocks were upsurging, and this was on the back of a news that India is mulling over easing rice export limits. To discuss more about this, today we are joined by Mr. Rajiv Setia, Joint MD at Chamanlal Setia. Welcome to the show, Rajiv. My first question to you is that, there is a possibility that, the government is mulling over easing export limits for the non-basmati rice segment. If this happens, what is the kind of benefit that your company will have, one thing, and overall sectoral benefit, what are you expecting, that how will this aid revenues for all the companies that are rice producers?
Yeah, at the outset, I would say it is excellent step of the government. If they really implement it, MEP of $500 and $100 export duty, that too on the quantity base. Quantity base is the right way of imposing any kind of tax in import as well as exports. So, apart from normal low price non-basmati rice, we have good varieties also like Sona Masuri, which has demand all over the world because our South Indian people live all around and they're doing well, and they really need this rice. And there are a few others I will varieties in non-basmati, which for my company also we have this kind of exports, and because of this uh, uh, kind of a ban, we were not able to do it. So, because at this moment only parboiled rice is allowed, non-basmati, and we expect the raw non-basmati rice is also allowed by the government. If they do so, the Sona Musuri, which is doing good qualities in non-basmati, they will also be sold around the world.
Understood. Rajiv, I also understand, and media reports suggest that the floor price set for this will be around $500 per ton.
Yeah.
What do you
Yeah.
think about this pricing? Do you think that this is sufficient, or do you expect that the price hike should have been more?
Right now, it is okay, $500 for the good qualities. And as regard the international prices is concerned, it is right price. But yes, when the flow of paddy and the crop arrival will increase in the coming time, when harvesting will start, maybe government will have to reconsider and reduce the MEP. 500 may not work at one point of time. It has to be reduced to 400 or 450, something like it. Depends upon because business doesn't happens on arbitrary floor prices. It happens on with the economic law of demand and supply. This is how the prices behave in the international market. And we have competitors also for non-basmati. Thailand is a big competitor, and few other countries also. So we have to be very careful for this kind of
Understood.
business.
Understood. And there are media reports suggesting that the 20% levy of shipments on parboiled rice may also be scrapped. So how do you think this will aid your company as well as the entire sector?
Yeah, it is going to, because my company is mainly into basmati rice, and we are very limited in non-basmati rice. So for me, uh, it's not really affecting any side. But yes, opportunities do come for every industry, every exporter, and if the on quantity base it is done permanently, it is a very good way. Otherwise, plus minus keep on happening. That's not right for the nation as well.
Understood. Understood. And considering all of these things, let's say if this happens, your revenue for March 24 was around 1350 crores. So going forward, if this happens by the end of FY25, what is the kind of revenue uptick that you're expecting? First thing, and how will this also aid your margins?
Yeah, unless we don't discuss about basmati, I cannot explain that.
Sure.
You see, the basmati in preceding years, it was $1,200 MEP was imposed, and that was the period which caused slowdown of the business of entire industry. It hit everyone. And now it is 950. It was brought down to 950, and we all clapped. It's a good, very good. So now again, some of the varieties like 1509, which has already started arriving, it's a early crop, also comes from UP. And the price is as low as 750 to $800. How can we export at 950? So, I mean, again, you see, it's the economics laws that play for the prices, and the government has to be proactive and very quickly take the decision. We are hearing 800 is recommended and is likely to come any day. But I mean, the kind delays happen, we prove as a non-serious exporters world around. So we have to take quickly all these decisions.
Understood. But Rajiv, if you can quantify that for me, because you're also planning to add 3 new packaging units in Karnal. So
Yeah,
overall, what is the kind of revenue uptick that you're expecting in FY25? So
yeah,
from
yeah.
this 1350, where will the revenue go by the end of FY25?
Yeah. Because had it this $1,200 restriction, MEP would not have been. It was government compulsion to keep the prices low for normal rice. So we can't comment much on that. But had it been smooth, my turnover of the year gone must have been above 1,400, which I achieved in the year under 23. So, if everything goes well, we are likely to achieve somewhere around 1,600 crore positively in the year to come. And we
Okay.
have targeted around 2,000 crore revenue in 2 years.
Got it. Okay, so 2000 crore revenue target in the next 2 years. Got it. And you're also planning to explore into the spices business. Any update there? What is the new thing that's happening there? Because we've seen regulatories coming in and actually taking ahead the spices business and seeing that there are a lot of regulatory breaches there. So what is the progress for you there, and what are you aiming at when it comes to spices business?
No, we are not going to come in spices because we are going to have a new unit in another 3-4 months in Gujarat. And we have possibility of exporting a couple of spices product from Gujarat, whatever is available. This this groundnut is available a lot in Gujarat, and sesame seed is available. A couple of spices are available. That's an idea because we have opportunity
Understood.
to start simultaneous business, and we'll definitely do that.
Understood.
Because,
Okay.
because we are exporting in 94 countries now, we have multiple range of customers,
Right.
and all are in food item. All of them are, most of them are in spices and different food products.
Right.
So the company intends to go only in food products, nothing else. So because that's a ready-made thing for us.
Right. Okay. Well, Mr. Rajiv, thank you so much for taking out time and speaking with us at NDTV Profit and giving us those insights. Well, it's time to slip into a short break. On the other side, we will bring you a conversation with the management of AGS Transact. Stay tuned.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the long street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
एक ही लक्ष्य, नेशन फर्स्ट, एक ही इरादा, 2047 विकसित भारत।
So, there is good debt and bad debt. I think there's debt which helps you create assets, which we would classify as good debt. For example, if you take an education loan for something which is truly a good program, good course, which is going to take you further, I think that's good debt. It'll pay back. It will take some time, but it'll pay you back well. The problem is if you over leverage, if you take too much debt simply because you assume that the future is a replica of the past.
As Vishal just said, there is good sugar.
Goyal. Hello and welcome. You're watching NDTV Profit. I'm Harsh Saita, and we have with us the management of AGS Transact Technologies. We have Ravi Goyal, who's the chairman and managing director at AGS. The update is that they've renewed their agreement with a large private sector bank. And what they're suggesting is that incrementally it'll add 30 crore of revenue because they have gone and they've changed the terms of the agreement with the private bank. So let's try and dive a little deeper, try and understand what impact this will have on the overall business, because it might change for pretty much all their agreements. Mr. Goyal, good morning.
Good morning.
Sir, just give us some insight, give us some understanding. What exactly has changed as part of the terms of the agreement?
Right. So, thank you, Harsh. As you know, we are there in the ATM outsourcing business, and we have contracts with the majority of the banks, private sector and public sector in India. We have been a pioneer in bringing this concept of outsourcing in India. These contracts are normally from 3 to 5 years, and every time when the contracts gets over, it is renewed and renegotiated. So this is a part of that. So this time we have not only gone for only transaction model. I mean, as you know, the outsourcing contracts, some are on fixed model, some are on transaction model. This particular contract, what we have renewed is on fixed plus transaction model instead of only transaction model. And we see a lot of contracts getting renegotiated, renewed in the similar lines.
Got it, sir. And sir, my understanding is you have 10 to 12 odd clients in this space.
Right.
And therefore, likely that most of those 10 to 12, as those contracts come up for renegotiation, will move to the transaction-based model?
No, so as I said, that a lot of banks are on a fixed model, some banks are on a transaction model. So we have basically converting the transaction-based model into a fixed plus transaction-based model. And we see this trend continue in the future also.
Okay, let me try and keep it more direct. 30 crore of revenue added due to this change. First off, I want to understand 30 crore right off the bat in this year itself?
Yes.
Okay.
Yeah.
And what's the potential like therefore? So say out of the 10 to 12 clients you have, maybe 3 or 4 you expect such renegotiations to start to happen over the next maybe 2 to 3 years. How should one look at it?
Yeah, over next 2 to 3 years, definitely. Even in this year, we are discussing with few more banks, and we'll keep you informed on that. But definitely, in next 2 to 3 years, we see more contracts getting renewed.
Understood. And the cost structure for you remains the same, so that does not change. This should incrementally do you better on margins.
Absolutely, that's right.
So this should typically trickle through to margin as well as bottom line, completely, the 30 crore.
Absolutely.
Understood. And therefore, where should this take margins with the maybe 2 to 3 new clients also expected to get onboarded this year?
Right. So the cost structure remains the same. So this incremental will definitely go to the bottom line and should kick in at least 1.5% to 2% better margin.
Understood. Got it. And with regard to just top line growth otherwise, outside of some of these, so your top line for viewer context is around 1,500 crore for FY24, 30 crore added to the top line, maybe 2-3 more clients, maybe 100 odd crore coming from, this kind of a structure change in terms of agreements. So a likely 6% incremental revenue, maybe FY26. But just to try and break this down a little bit better, what's the kind of growth trajectory you're looking to clock? Because you've signed new agreements with an SBI as well with regard to new ATM setup. You continue to do good growth on some of those areas as well. So talk to us about that.
So as we mentioned last time that we have got 2 contracts from SBI. One is is on the on a capex model of around 75 crore, and second is on a outsourcing model for 7 years. Here we are going to deploy around 2,550 machines, which would give us a revenue roughly of around 1,100 crore of over seven years. So this should be on a full year basis. It should give us a revenue of around 150 crore. This year the rollout would start from H2, and we should be able to complete it in this financial year itself. The capex order would definitely get completed before September. So we see that this itself should give us more than around 150 crore of incremental revenue.
Understood. So last 5 years, FY20 to FY24, in your own disclosure at the end of FY24, and I'm referring to that, top line hasn't expanded. In fact, it's contracted a little bit. Talk to us about and give our viewers some context. What has happened and what changes going forward, just in terms of growth?
Right. So as mentioned in the investors call also, what we have done over the last 2 years is that we were there in a lot of product businesses like retail hardware for billing. We were there for in color dispensing machines. We were there in the oil marketing, retail outlet automations. So there were a lot of product businesses, and our service revenues used to be around 85% of our total revenue. Over last 2 years, we have been cutting down on our product businesses. So our revenue of services has gone from 85 to 95%. And what we have seen is also this brings a lot of focus on our services, and also reduces the working capital.
Understood. And therefore, just in terms of growth, what's the kind of top line growth that one can expect coming from you over the next 2 to 3 years?
So as I said, that this SBI order itself should give us around 152 crore revenue minimum on a yearly basis. We are working on some other contracts also. There is a lot of focus also on the digital side, where we are we have started issuing the cards on our PPI license, and there also we see a lot of growth coming in the revenues in next few years.
Understood. And so with regard to cash profit as well, it's been quite muted just in terms of your cash profits, largely because of margins. Now that margins will likely recover this year, 2 percentage points is what likely you're suggesting or indicating. Would PAT margin also improve, and will it get better?
Yes, definitely it will get better over a period of time. Yes.
Understood. And where do you see that going, therefore? So this 150 odd crore order should add maybe another 10% to top line. And thereafter, you have another 30 crores coming from the current restructured agreement. And of course, all of that adding to margins. So where should this overall look? I mean, how should one look at numbers overall?
No, as I said, that for future we are working on few more contracts, and obviously once those contracts gets materialized, it would be added to the future revenues and the bottom line.
Understood. And with regard to net debt, it's been coming off from some of those highs. But where should do you believe that this is the level at which you'd like to be at when net debt is concerned?
Again, Harsh, we had mentioned it in our analyst call.
Yes.
That we have reduced our debt by around 100 crore last year. And what we expect is in the next 4 years' time, we should be debt free.
Okay. What are the newer growth levers that you're looking for? Because of course you have SBI. Of course you may be pitching certain ATM related services to other customers as well. but they are not converting significantly likely, at least as of now. So what are the new growth levers you are looking for in terms of digital, in terms of, and how will that start adding up for you in terms of business?
Right. So Harsh, I mean, as you know, we are in the payment space. I mean, cash, we are doing it in ATM outsourcing. We are also doing a cash management through our 100% wholly owned subsidiary Secure Value. So this in cash, we have a substantially a good market share. On digital front, we have been working on our issuance of on-go cards through our PPI license. And we have got three major lines of businesses in that. One is we are doing it on a co-branded platform. So we have already signed a deal with Patanjali for issuing of their closed loop cards to our on-go platform. And that should be around 25 lakh cards. They have already issued. They have a GTV of around 1,500 crore every year. So we expect those cards to be converted to our open loop cards and bring it on our platform. We are also working on similar kind of tie-ups with other corporates. Second, we have tied up through RBL Bank for issuance of Bangalore Metro NCMC card. This has already started. We have already issued around 50,000 cards, and we expect this to grow in the next few years. They already have around 35 lakh cards as a closed loop cards, and we expect that in next few years, those all cards would be migrated on this, our new platform. Third, which is very interesting, is we are also launching, we are already doing a pilot with HPCL for on-go fuel, and this very soon we should be able to launch nationally, and this should give a very, very good growth to our digital business.
Understood. So my last question is on cash balances. You're generating roughly 250 to 300 crore of cash every year. What are you doing with it?
So this is basically for the, obviously the payments of, we are reducing the debt every year.
Sure.
And this is also used for our growth for outsourcing and digital platform.
Understood. Mr. Goyal, it's been a pleasure interacting with you, breaking this down. Congratulations on this new hybrid agreement that you've signed, and likely many more to go. We'll wait for some of those announcements to come, but thank you so much for speaking with us.
Thank you, Harsh. Thanks a lot.
Right. Out of time to slip into a very short break. More on the other side. Stay tuned to NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the long street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
एक ही लक्ष्य, नेशन फर्स्ट, एक ही इरादा, 2047 विकसित भारत।
Specific PIN codes are not basically given insurance. Specific occupations are not provided insurance. People who do not have educational qualifications, undergraduate, are not provided insurance. So in short, term insurance is a very
Hi, thanks so much for joining in. You're watching Ask Profit on NDTV Profit. My name is Alex Matthew and with me is Smriti Chaudhary, and we'll take you through the next half an hour or so of trade. Let's take a look at where the markets are right now, and it's finally we're seeing a little bit of a drop on the benchmark Nifty 50 as well as the broader markets. I say finally because we've seen quite a bit of chop and churn over the past several sessions, but we've seen very narrow ranges. Today, however, you've seen a cut of about 0.5% or thereabouts. We're off the low point of the day, but we're still trading with cuts of about 200 points or thereabouts for the Nifty 50. The broader market seeing bigger cuts. You have the mid-cap index that's down over 1%, 1.4% to be precise, or 1.3% to be precise, but it has picked up from the low point of the day. The small cap index has also recovered quite substantially from the low point of with cuts of over 2%. It's now down just about 1.2% or thereabouts. So very clearly the market breadth tilted in favor of the declines right now. Take a look at some of the contributors on the benchmark, and that in fact is going to present the picture for today, because today it's a tale of two stocks in the automotive space. Of course, Maruti Suzuki contributing to a very small sliver of gains for the Nifty 50, but the big loser on the other end of the spectrum is Mahindra and Mahindra. Despite the weightage that it has on the benchmark, it's contributing a decline of as much as 42 points on the benchmark. And we'll get to why in just a bit, but do note that Reliance Industries among the heavyweights also losing ground, and you would see HDFC Bank also, as well as ICICI Bank, the heavyweights on the benchmark, are leading the declines. Not too much to speak of in terms of individual movers today, but the sectoral picture is also going to present the same scenario, which is mostly everything is in the red, and that continues to be the case right now as well. The big losers, of course, are the auto pack, down about 2%, led by Mahindra and Mahindra. Let's talk about why Mahindra is losing ground. Down, if I'm not mistaken, continuing to lose about 6.5%. At this juncture, the market cap erosion is close to about 24,000 crore rupees. The reasons are obvious to those that have been looking at the space for some time, but it may not be obvious to you, and so therefore let's get Puneet in to tell you about the key reasons why the stock is under pressure today. Puneet, there's a confluence of factors and it's reached a tipping point. But what, according to you, are the key parameters to look at?
Yeah, thanks for that. Now, there are 3 to 4 key reasons why we feel that this particular fall of roughly 25,000 crore in market cap today has happened. The first one is, of course, the longer waiting period that the customers have to wait for getting the particular car from Mahindra and Mahindra. Now, on variants of the top variants of XUV 700, the waiting period was as high as 8 months on some models, and this is not a problem which has happened this year. It has been persisting for the last 12 to 18 months, which is a key problem for customers as well. We look at the second reasons. The second is their complete absence from the hybrid space. Now, we have seen the UP government yesterday come out with a notification where they will be waiving off any kind of registration charges on hybrid vehicles, which is a key positive for Maruti Suzuki. We saw a run up in the stock yesterday, and it's continuing the momentum today as well. The savings is roughly in the bracket of roughly 1.8 to 2 lakh per vehicle, and Mahindra currently does not have any models, and post the interaction with NDTV Profit after Q4, they had mentioned that they don't see the space evolving as much as the EV space, which they are very positive on, and they don't see themselves entering anytime soon. The third key reasons could be that production has been increasing per month, but it has not been in line with keeping in pace, in line with the demand that the products have for M&M. Now, they have also launched the 3XO recently, and some of the variants are, having the highest variant of 3XO has 10 to 12 weeks of waiting period, while the entry-level 3XO has a waiting period of roughly 30 weeks for multiple models as well. So that's one of the key issues. And finally, price cuts by competition. We have spoken about Tata Motors cutting prices of the Harrier yesterday and today as well. While M&M has matched those, customers have a lot of other options as well to choose from instead of waiting for more than 8 months on certain models as well. So this could be 3 to 4 key reasons why M&M is falling in trade today. Back to you.
All right.
All right, thank you so much, Puneet, for that. And on that note, let me introduce you to the guests for today. We have Sameer Dalal of Natalal and Son Stockbrokers. Soon we will also be joined by our technical guests. But Sameer, let's talk about Mahindra and Mahindra. Puneet jotted down a couple of reasons for the weakness in the counter today, and these do not seem to be something that may be resolved in a shorter period of time. Something like demand that now seems to be weak, and of course the competition for Mahindra and Mahindra. What's your take on the counter? How do you see this panning out, and of course the impact on the earnings going forward as well?
So I agree that there has been a trigger for the stock to correct. But if you ask me, the real reason for the correction is the fact that it had run up the amount it has over the last 1 year plus, right? The stock used to trade at around 1400, and that also was after it moved up from about 700-800. So if you see, Mahindra and Mahindra has consistently moved up from 700 all the way up to 3000 over a period of time. Now, these were the reasons. People wanted a reason for the stock to correct because at the end of the day, valuations had moved up quite significantly. So if you ask me, is because demand is strong and the waiting period is 8 months, I think that's a great positive to have. It basically means that the demand for the cars are strong and people are willing to wait for the 8 months because they believe the car presents X amount of value to them, or is as good, and they don't mind waiting for that. So I don't think that's a negative. Yes, price cuts is something that is a bit of a negative, and that is going to affect earnings to some extent, which was the trigger, right? Which basically says that now if profitability is not going to be as strong, then why should the stock trade at these high valuation, lofty multiples? So coming back down a bit. But overall, like you said, demand is still strong. They still have an 8-month waiting period for many cars, 3 months for the smaller variants. And going forward, we believe the Indian economy is only going to keep growing over a period of time, and the number of cars sold will increase. So Mahindra will do well. But also you got to remember that this is not the main business of Mahindra and Mahindra. Mahindra's main business is the tractor business. And that is something that we should also focus on. Now, if I were someone who focuses on Mahindra's tractor business, if we have a good monsoon this year, which is expected, we've already caught up with the averages and they're expecting it to be slightly above normal. Then if the tractor volume starts doing well, the operational efficiencies and that start kicking through, I believe that will do really well for them, and the profitability from the tractor business will drive the overall growth and profitability. So that is something to focus on. And lastly, to, the one point that UP government has given hybrid cars some benefits. I think the electric vehicles will also at some point come in for these benefits. I think the electric vehicle manufacturers will also talk to the governments of the various states to give similar benefits to electric vehicles. And if that happens, then I think that becomes a level playing field across the board. But for the time being, yes, there is a slight negative. And these were the triggers that led to the correction of the overvaluation.
Just a quick follow-up, Sameer, and then we'll jump into the queries. You point out about the 8-month waiting period. It's something of a pain point for them from my perspective, because customers, and we hear about this from dealer checks, customers are actually cancelling orders. They're tired of waiting for long periods of time. It's not like alternatives are not available in the market. It's a highly competitive marketplace, especially in a scenario where prices are being cut by competition. People might actually choose to not wait that entire 18 months or 8 months, or the long period. So is that not a negative?
To some extent, yes. If cancellations happen, it is a negative, but the fact still remains that you have 8 months worth of demand, right? So let's assume that 30% of the people that are waiting for that 8 month, who have put their names in for the 8-month waiting period, cancel out and fall off by the wayside because they find a competitive car which is as good or something that fits their budget, fits their requirements, fits all the benefits that the Mahindra XUV 700 is offering. That still means that the next guy, the guy who was waiting for 8 months comes down to about 4 or 5 months. So he's a happier person, and then new people come into the system. It's not like that these were the only people that were willing to buy. There will always be a new bunch of people that come to buy, and that will again make sure that the demand for the company remains intact. So yes, it's a somewhat of a negative. I wish they could produce the number of cars that are there right away and sell them off so that the profitability comes. But you do have constraints on production, and they're doing their best that they can. So I don't look at it as a massive negative. It is a small negative, but like I said, it's a good positive to have that you have such strong demand.
Hold is your recommendation on M&M?
For the time being, I would take some money off the table. I think valuations have moved up. I would like to get back in at the 2,200, 2,300 levels. I don't know if that's going to happen, but for the time being, I would take some money off the table because I think valuations have moved up beyond justification.
Okay.
Well, Alex, just one more point to add here. Axis Cap today said that there may be an overall weakening demand because now we're seeing price cuts. So it's actually a paradox kind of playing out where at one point we're seeing that sort of demands, but also Axis Cap believes that...
Okay, so Axis Cap is one, but so Puneet was pointing out this earlier when I was speaking to him about discounts or price cuts around this time. And Maruti apparently, 1st of July, often, practically every year, announces either a discount or a price cut. Because it is a period when you would think, with the onset of the monsoons, people have, there is a dearth of people going to the showrooms. Generally, you have demand that is sluggish. You want to push demand a little bit. And this is the rest of the industry also playing catch up and saying, look, why, the market leader is doing it, let's also cut prices. So I don't think that we should read too much into just that factor. Demand seems to be strong. I guess it's various other factors. Like Samir was pointing out, it's a confluence of factors. It's a reason for the stock price to fall after gaining, 60+% in the year-to-date period. Let's jump to the queries. We've got several that have come through, and I would like to remind you, if you've got questions for us, you can send them to us on that WhatsApp number that you see on your screen, or in fact on any of our social media platforms. We've also got Vaishali Parekh joining in to answer all of your technical questions. We are going to start with one, incidentally. Vaishali, this one's for you. Cummins is the counter that we're talking about, and we've got a viewer tuning in from Qatar. The first one, Anil, is asking whether he should sell. He's holding on to gains of 135% on Cummins. Should he book?
So, good morning. I think no harm booking partial profit because we've seen a one-way rally coming in, and right now the technical indicators are showing some signs of exhaustion. So either book partial profit, or I think 3,800 should act as a trailing stop loss. That should be the level that one needs to watch. If 3,800 levels break, then I think the stock is ready for a profit booking. But till then, either we can see some more bounce if market is holding on to these levels.
All right. Next counter we're talking about is ONGC. The question is from Mr. J. Bose. This is also a short-term query. Vaishali, coming back to you on this one, would you suggest buying ONGC at the current levels? And the time period is very short, about 15 days or so.
280 would act as a support. That would be the level to watch for to buy the stock, or else about 305, because 305 is the resistance level. And just a few days back, I think yesterday we saw a high of around 302 or 303. Yeah. So I think that is the level that one needs to watch, either in dip or giving up a new breakout.
Got it. All right. The next one's from Prabhu. And Prabhu's asking about Cochin Shipyard. What a stock this has been. He's bought at levels of 1993. Let's put up the chart and see where it's currently trading. So even despite the fact that he has not captured the entire rally, he's still gotten quite a substantial gain. I would normally have gone to Vaishali on this, but I'm curious about what Samir has to say. Samir, if you think that a 70% run-up in the price of Mahindra and Mahindra is reason to take money off the table, what would you say about Cochin Shipyard?
So I think honestly there's a reason to take money off the table, and I would sell because let's be honest. Okay, the shipbuilding industry in India is going to see great amount of growth. Cochin Shipyard is one of the leading companies in that space. Their order book is very strong. I agree on every point that is there on the fundamental strength that the company is displaying. But the problem is these are long gestation projects. These are not projects which get finished within 6 months or 2 months or 3 months. These take a year and a half for a lot of these ships, these larger defense ships to get built, right? Now, you've agreed on X amount of price. Now, during that period of time, if certain price variables change, if certain component price variables change, you're able to pass on some of it and not all of it. So your margins may not be as healthy as you think they would be. Plus, we are also assuming that they are going to continually be able to get large orders from the defense space and from the other normal general, dredging or whatever they're building. And it's going to, but like you said, when you talked about Mahindra, you talked about the fact that you have to wait very long. Now, if you place an order with Cochin Shipyard, you're going to have to wait extremely long. So maybe somebody who wants a ship will probably go to an international supplier if they have some capacity where they can give it to them quicker. So I would not put all my eggs in. I mean, I would not think that Cochin Shipyard can continue its rally. It's been a fantastic rally. Valuations are well above what the historical averages are. Also, we got to discount that historical averages have been very low because it was a PSU and PSUs traded at very cheap valuation. But even adjusting for that, I think valuations have moved up. So I would take money off the table. I would not be looking to buy, but I would actually take money completely off the table.
All right, fair point. We'll take a short break now, but we'll be back and we'll take more queries on the other side. Stay tuned.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Long Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
एक ही लक्ष्य, नेशन फर्स्ट, एक ही इरादा, 2047 विकसित भारत।
So, there is good debt and bad debt. I think there's debt which helps you create assets, which we would classify as good debt. For example, if you take an education loan for something which is truly a good program, good course, which is going to take you further, I think that's good debt. It'll pay back. It will take some time, but it'll pay you back well. The problem is if you over leverage, if you take too much debt simply because you assume that the future is a replica of the past.
As Vishal just said, there's good sugar, there's bad sugar. Your good sugar is going to be from your fruit sources and stuff like that, right? And of course, then there's refined sugar, etc., which comes under your what's been labeled as bad sugar, right? So to come down and get into certain financial terms or bringing it into play, I would say budget for it.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Welcome back. You're tuned into Ask Profit. We were in the middle of taking questions. The next one is State Bank of India. The question is from Asif, who bought it at a price of 833. Samir, coming to you on this one. While, of course, we're going to see a bit of a softer quarter for the banks this time, but from a longer term perspective, would you suggest holding on to it for somebody who bought it at 833? It's not a lot of profit that they've made till now on an SBI, of course.
So we are very positive on the entire banking space, right? Let's put it this. Yes, the banking industry is going through a bit of a tough patch because of the fact that deposits are not coming in the way the banking sector would like it to. But the minute you see the economy growing and loan growth picking up, I think you will also see the deposits starting to rise. Right now, some amount of the deposit money is moving in towards the equity markets, into G-Secs. But as interest rates start coming down, I think the banking sector will eventually start getting some more of its money from the fixed deposits, from savings, CASA, whatever. And as that starts seeing an uptick, we believe the banking industry will do well. Now, SBI within that pack is the largest bank, and because it's a PSU, it's trading at a discount to the large private sector banks. But now SBI, if you look at it, has great subsidies which give a lot of value to the business. They will even look to list their mutual fund business. I mean, they've listed their life insurance, their general insurance, and now you probably see some more listing and value unlocking. And we believe that the gap of valuation catch-up could probably happen. Of course, it may not be the same level that ICICI, but we remain positive on SBI. We think any correction is a buying opportunity. Yes, this person has bought it near the top, but if it falls, add some more, but stay put. Don't sell it outright.
What if you don't get an opportunity, Samir, and if there's a time-wise correction in State Bank of India? Is it better then to average your cost over a period of time and you just keep accumulating?
So yes, you could probably keep accumulating, but then you can wait for 3 months. If there's no correction over a 3-month period, then you can. But like I said, we've been expecting the markets to correct. And when the markets correct, it doesn't matter what stock you are. Everyone corrects across the board. So SBI too will give you a buying opportunity at closer to 780, 790, 800 odd levels. At that time, you can add some more onto the stock.
Point. Solara Pharma, Vaishali, coming to you in this next one. We've got a question from VS Money. He's writing in from Coimbatore. He's at a loss significantly. In fact, he's lost 48%. So he's bought at levels of 1146. The stock is currently trading at 624. Yeah, so he's lost quite a substantial portion. He's asking, is there any possibility of him getting his buy price?
Solara Pharma, active Solara Pharma is right now at its all-time high. I mean, so
I'm not sure.
So he must have bought it.
Yeah, I'm not sure what the.
He must have bought it much earlier. I guess continue holding, because if I'm seeing the weekly chart, it's quite on an uptrend. And well, we may see some near-term hurdle coming at around 680 levels. But above 680, the stock is ready for even 1000 levels. So I would say it's a positive. It's showing all the strength right now.
Yeah. All right. The next counter is Adani Power. The question is from Shubhodeep. They bought the counter at a price of 298. The question is, should you continue holding on to it? Samir, coming to you on this one, for somebody who bought at 298, an Adani Power, a considerable profit there. Maybe should you book some profits or should you hold on to it?
So I don't have coverage on Adani Power. Okay. But what I can say is the power sector for the next few years is going to go through a very positive patch, because we've actually reached a situation where the power demand is now beginning to outstrip supply. So you're going to see new capacity additions. I know Adani Power is putting in a lot of renewable energy capacity, which will obviously go on stream over a period of time, and that will allow the profitability to grow. But what I did last year for Adani Power, the valuations have again moved up far beyond where justifiable value lies. So if I were purely looking on valuation front, probably I would take some money off the table, but I am positive on the power sector for the next 3 to 5 years.
Vaishali, do you also hold the same view, some money off the table, and if you have a target on this counter?
Well, I would say technically it's showing a lot of strength. Currently also it is at a support level. So I would say keep a stop loss of 700 and hold on for this stock, because above 735, 740, this can in all likelihood retest 780 to 800 levels. So I would say keep a stop loss but continue holding for now, because there is no sign of negation or profit booking seen on this counter right now.
All right, standard disclaimer, this is NDTV Profit, part of the NDTV group, and it's owned by the Adani Group. TD Power is the next counter we're talking about, TD Power Systems. It's currently trading at 412 or thereabouts, and we've got Ratika, who is looking to invest for the long term. Do you have a view, Samir, on the fundamentals? Would you say this is a good counter to enter into?
So I don't have coverage on
okay. Vaishali, what about you on the charts? Does it is this a good price to consider entering?
TD Power, the one which is at 400 levels, right?
That's right, 411. Yeah.
Well, no, I would wait for a little bit of a dip. I think the ideal level would be around 350, 360 levels. And anyways, even if I'm seeing the longer term chart, I mean, it is shown a lot of up move. So I would say it's better to wait for a dip.
All right. Next counter is BDL, and This question is from Ankush. They bought the counter at a price of 1,593 rupees. It's currently trading at over 1,600 rupees. Samir, coming to you on this one, for somebody who's bought at elevated levels, we've seen the stock rally quite a bit. Should you continue holding on to it?
So again, similar story as Cochin Shipyard, right? The stock is in the defense space. It's generated phenomenal returns over a longer period of time. Valuations have moved up well beyond what I have comfort levels with. So I would take money off the table. But, the way people are talking about the spends from defense, the kind of interest that is going there, I won't be surprised if the stock continues to move up. But I would, purely based on fundamentals, I would take money off. I would sell the stock.
Would that also be the case for HAL, for somebody who's bought at levels of 1,109 and a significant profit? Would you take money off the table?
Absolutely. Across the defense space, I think valuations have moved up. In fact, I want to just bring one point to your attention. There was a news flash this morning that HDFC, that has a defense fund, is looking to stop getting additional funds into the defense space because they are also finding it difficult to find investment opportunities in that space for the time being. So given the fact that you have top fund managers also beginning to think that, look, valuations are beyond justification and there's no point putting more money into this space, gives you a very clear indication that, look, there is over exuberance in the space. Even if returns were to come over a 3-year period, the returns would be very subpar. You could walk away with maybe 7 to 10% CAGR because of the elevated valuation. And my basic theory is, if I were to put money to get a 10% return and I'm taking so much risk, I don't think it's justifiable. Because today, if I put money into a pure GSEC, I can walk away with 7% on the yield. And if interest rates fall by 50 basis points over a year period, I could walk away with close to 9 to 10%. So I could get 10% return with a risk-free kind of an investment. Why take risk and earn 10% return? So given the valuations, given what is happening, I would say it makes sense to take money off the table in the defense space. You have to be, of course, you have to look at valuation individually, but largely all of them have moved up quite significantly.
Fair point, and that's a very fair point that you made on the HDFC Defence Fund as well. We marked that. If you want to read about it, it's on the website. Quick view on Yes Bank. We've got Naveen who wants to know about shares that he's bought at levels of 24. He can hold for a period of 2 years. Vaishali, quick view. Should he hold on?
Well, I would say yes. Technically speaking, I would say keep 23 as stop loss. And once the stock moves about 28 levels, it brings in further conviction. So right now, observe a range of 23 to 28. But I would still suggest that might as well get into HDFC Bank or SBI or ICICI if that is the choice.
Okay, fair point. All right. That unfortunately brings us to the end of this edition of Ask Profit. We've run out of time. Even though I said that I would take Yogesh's question. Yogesh, hum kar lenge aapka sawal. Samir as well as Vaishali, thank you so much for joining in and for answering all the questions that you did answer. Viewers, like I said, we're out of time. From Smriti and myself and the team that put this show together, thank you so much for watching. Do stay tuned. Lots more coming up over the course of the day. And this is NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Long Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
एक ही लक्ष्य, नेशन फर्स्ट, एक ही इरादा, 2047 विकसित भारत।
headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
People tend to borrow from their own resources to pay for their kids. The thinking, of course, is and look, this is an Indian concept.
Hello and welcome. This is Hot Money. I'm Agam Vakil, and in this show we take you through all the stocks which are buzzing in trade or have been the flavor of the season. But before that, a quick look at the markets. We're looking at weakness at the moment. We haven't seen too much, relief, on the upside. Even though the markets are off days lows, we are still looking at weakness. So the Nifty 50 is down around 0.7%, and something like the Bank Nifty, where we are looking at that weekly options expiry, is also down around 0.8%. Bank Nifty has been relatively moving sideways since the last couple of hours of trade after the initial decline there. So that's something to bear in mind. Remember that, while the index has been consolidating over the last 2 hours, it could go in any direction. That's something that you need to bear in mind. But, besides that, in terms of the constituents of the Nifty, and the reason why I want to talk about is the kind of traction M&M has been building. And in fact, at the moment, M&M is providing a decline of around 49 points out of the 180, 190 odd points declines that we've seen on the Nifty cumulatively. So about a quarter of that weakness is only on account of M&M. Besides that, we have Reliance Industries, HDFC Bank and TCS weighing down on the indices to a certain extent. But, and to the flip side, we don't have as much support, though Maruti, Bharti and Grasim are doing whatever they can. But that's something to bear in mind as well. In terms of broader markets, today is a day where they actually take a little bit more of a step back. There is a relative underperformance. The mid-cap index is down around 0.84%. The small-cap index is also down around 0.7%. Remember that there has also been a significant recovery from days lows for both these respective indices. At one point in time, the small cap and the mid cap indices were down by nearly 2%. We have seen a recovery, and that is a big takeaway. I reckon that both these key indices are off days lows. Moving on, very, very quickly, if we can actually take a look at some of the key movers as well in the broader markets, and again, a lot has been spoken about how things are faring as far as your broader markets are concerned. So you have weakness returning in some of your fertilizer stocks like RCF, Deepak Fertilizers, Chambal Fertilizers. A lot of your metal stocks are under pressure as well. It's something that we're going to address in the show as well. And of course, Bombay Burma looking at about a profit taking after a sharp surge upwards. RVNL continues to defy gravity. That's the one which is once again in the green by quite an amount. That's up as much as 9%. So you still do have green shoots there, but on an overall basis, if you consider the market breadth of the NSE, if you compare the advance and the decline, you'll realize that there are clearly more declines. In fact, 4 declines for just about 1 advance coming through as far as markets in today's year of trade are concerned. With that, let's talk about all the stocks that we're going to discuss in the show today. So M&M naturally is something that we are watching out for. Delta Corp on the back of earnings. We also will put the spotlight on RVNL because of the kind of upmove it has seen. And we're also going to talk about the new IPOs, the new listings today, and fertilizer stocks, and of course the metal pack, which is largely under pressure owing to the fall in commodity prices. And to take us through that, we are now in conversation with Sharmila Joshi of sharmilajoshi.com. Sharmila, good afternoon. Thanks for joining in. Before I come to you, as usual, I'll introduce the first topic, or in fact, I'll let my colleague Puneet introduce the first topic, and that's Mahindra and Mahindra. Puneet, what's ailing this counter?
Well, thanks for that. So it has eroded a market cap of roughly 25,000 crores in trade today. And we see that there could be 4 potential reasons for this. The first is, of course, the longer waiting periods for Mahindra and Mahindra that the customers have to wait for. Top variants of the XUV 700 had waiting periods of roughly 8 months for receiving their particular product, and this has not been an issue which is ailing recently. Over the last 12 to 18 months, we have been seeing that the waiting periods haven't come off for some of the top variant products such as the XUV 700. The second one could potentially be the absence from the hybrid space. Now we did see the UP government notification which came in yesterday, which they will be waiving off registration charges for purchase of hybrid cars. Now they have a current policy of roughly 10% tax over cars of roughly 10 lakhs, and this could potentially save buyers of with roughly 1.8 to 2 lakh rupees of registration charges that they won't have to pay. This will also help them reduce the parity between petrol cars as well as hybrids. Now Mahindra and Mahindra is completely absent from this space, just like its peer Tata Motors. And speaking to us after the Q4 results, Mr. Anisha, the managing director, did mention that they don't see the need to enter this particular hybrid space right now. The third key reason could be the production increases. Now it has been increasing per month, but so has the demand, because launches such as the 3X, so the entry level variant has waiting periods of 32 weeks. So the production has been increasing per month, but not meeting in line with the demand kind of that Mahindra has. And finally, the price cuts which we've seen yesterday by Tata Motors as well as the other players such as Maruti, who have done the price cuts. Now, specifically, they have reduced the price cuts for Tata Motors in the SUV space. Now, Mahindra has also matched the same in some of the variants, but customers will now look at waiting periods as one of the key things. When you look at the other 2 key issues in this particular space is, of course, the higher inventory as well as the price cuts. Now, Maruti has an inventory of roughly 38 days. So this whole space is buzzing in trade today. Finally, Maruti has also offered cash discounts in this particular month of July, and both the entry-level car variants have also some discounts. So Mahindra is of course lagging in trade today. Maruti did start upwards of 3% in trade on the back of hybrid cars as well as discounts, but it'll be interesting to keep a look out of this space going forward as well. Back to you.
Okay, Puneet, thank you so much for that update. Of course, it's that divergence between M&M and Maruti Suzuki. Sharmila, welcome to the show. Your thesis, firstly on M&M, because it started showing a lot of promise over the past 2 quarters, and it's not like it's corrected substantially. It's only come off from life highs. And in contradiction, and perhaps in contrast, Maruti Suzuki, how are you viewing both these counters going ahead?
First of all, the kind of correction that we are seeing on Mahindra and Mahindra seems a little. I don't think that any of the reasons that we have discussed or what I have also tried to sort of gauge at my end, nothing really seems to warrant an 8-9% kind of cut. So maybe there is something else. The valuations are a tad expensive, and I think that Maruti in that sense had a little bit of a catch up. Because there was a period where Maruti was sort of lagging, but I think even that the fact that it would catch up, that sign came about 2 or 3 quarters back, and we have seen Maruti move up from there. I think Mahindra and Mahindra is a very exciting product line coming up. They have an EV launch, and EV, to my mind, is going to be a focus area for passenger vehicle makers going forward. And I think that even if you're talking of a waiting period and then you see a cut for XUV 700 and then you see a cut of about 1 lakh rupees on their top variant, they're sort of sweetening the deal, so suppose you're willing to spend that kind of money, then you would just have to wait a little longer. And perhaps in that way, Mahindra and Mahindra also sort of ensures that they get the bookings, because I think it's a limited period offer. They get the bookings, and then they're sort of also ready to introduce newer models, because that also is another trend that we are seeing in the market. Everybody is doing either a facelift or there are new models coming up from
people in that space, SUV makers, passenger vehicles, and that is what is driving numbers, because people are attracted to more features. And to my mind, they've got that correct. The offering 700, the kind of features it has, and the fact that they have gained traction there is very commendable. And as I said, they have an electric vehicle launch coming up as well. So I'm not too perturbed by the valuations, because I own the stock, I'm a long-term investor, I'm going to stay invested, but I'm just perturbed by this 7-8% kind of a drop, because to my mind none of the reasons really warrant that kind of a fall.
Yeah. All right. So that's as far as your view on M&M Maruti are concerned. I want to very quickly pull up how, in fact, M&M has pulled out. And as you can see on your screen there, we're looking at a market cap coming off by as much as 25,000 crores. It is substantial. It is a considerable amount of deterioration as far as investor wealth is concerned. And we're still holding on to the market cap around 3.37 lakh crores. But again, it's something to watch out for. Well, that's as far as M&M and Maruti Suzuki are concerned. But from there on, we move on and address a relatively smaller company, Delta Corp. And this one has been the retail favorite, right? But it's also been under a lot of pressure, not just on because of the challenges with respect to the business, but also over the past many months, we have been seeing the company really under pressure because of regulations and change in them as well. Well, before I go to Sharmila, let's get in Mahima to tell us more about this. Mahima.
Absolutely. Agam, as you rightly mentioned, the company has been in pressure because of a lot of regulations since some time now, and the stock has also seen that pressure. Now, today the stock is particularly down because it came out with its Q1 FY25 update results, and the revenue was down around 30%, EBITDA down 68%, margins have significantly squeezed down from 37% to 17%, and net profits were down around 68%. Now, a couple of reasons for this particular result which was not up to the mark. Well, firstly, Delta Offshore Developers Limited, which is a foreign subsidiary of the company, has been struck off, and the loss on disposal of this subsidiary was recorded as exceptional item. Although this was not one of the major reasons why the margins did take this bigger hit. The major reason was that gaming revenues were down by around 25%, and compared to that, total expenses came down only by 8%. So this is one of the reasons why margins have significantly squeezed down. Now, despite of all of this, the board has recommended a final dividend of 1.25 per share. In terms of valuations, the company is trading at a PE of around 5.7 times, and in terms of stock performance, as I mentioned earlier, that the stock has seen some pressure since some time now. In terms of 6 months, it's down around 8%, and 1 year down around 41%. However, in the past 5 days, it was up around 8% because probably retailers were expecting a better Q1 FY25 update. So this is the overall view of Delta Corp and why it's down in trade today.
Okay, Mahima, thank you so much for getting us that update. Shamila, your view on this particular counter, it's not without its own sense of volatility that we've seen over the past many quarters. But, some retail investors would probably think, there's value in the stock. Why don't, there potentially could be an upside here. But how would you address these concerns as well as the potential here?
So, once again, a stock that I own, but I must admit that my experience has not been as great as it's been with Mahindra and Mahindra. And I think the reasons are, what has been discussed, the kind of regulation concerns they've had, and, that whole GST issue. And there was some hope in between that perhaps when the GST Council meets this time, they'd find some way out of it, but that has not happened, and the numbers are weak. So overall, honestly, this is a business that I like because, if you see internationally, gaming, gambling, these are businesses that do well. But unfortunately, in our context, with the kind of regulations that we've had and the kind of mindset that we've had towards approaching this has really hit the stock and their profitability, and it has introduced a lot of uncertainty in how they will sort of manage their business going ahead. It's like the cigarette business. You'll always find something negative in the budget for that as a space. So I think these kind of problems are going to plague the stock. So I think if retail enters it should do it at their own risk. I haven't sold simply because my holding isn't too large. But as I said, it's a business that I like, but it's just very difficult to deal with the kind of news flow and the uncertainties that you see surrounding this business, and then that how it affects the stock price.
Okay, so that's as far as Delta Corp is concerned. And well, on that note, Sharmila, stay with us. We slip into a short break, and on the other side, we continue with all the market action. Back in just a bit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Long Street deals, finance and policy news that could shape your tomorrow, the newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
एक ही लक्ष्य, नेशन फर्स्ट, एक ही इरादा, 2047 विकसित भारत।
So, there is good debt and bad debt. I think there's debt which helps you create assets, which we would classify as good debt. For example, if you take an education loan for something which is truly a good program, good course, which is going to take you further, I think that's good debt. It'll pay back. It will take some time, but it'll pay you back well. The problem is if you over leverage, if you take too much debt simply because you assume that the future is a replica of the past.
As Vishal just said, there's good sugar, there's bad sugar. Your good sugar is going to be from your fruit sources and stuff like that, right? And of course, then there's refined sugar, etc., which comes under your what's been labeled as bad sugar, right? So to come down and get into certain financial terms or bringing it into play, I would say budget for it.
Headlines you start your day with.
Welcome back to Hot Money. And what is hot at the moment is certainly railway stocks like RVNL. There's no stopping this one. It did seem like yesterday was hitting a break, but it's up another 8% right now. It's not at its life highs, which it made day before, mind you, so it's not too far away from that mark. But there's been a sharp 30% surge in just the last 3 to 4 sessions. So we are seeing a lot of gains in RVNL. Of course, that's notwithstanding, they have seen some order flows coming through. But if you look at the quantum of these orders, it doesn't necessarily warrant the kind of sharp up move that we've seen. But it has emerged as the lowest bidder for a 203 crore or railway contract from the Southern Eastern Railway. And of course, the execution is 18 months. So if you consider the revenue recognition is going to be very, very slow. Besides that, they've also signed an MOU with Tatweer, Middle East and Africa. Again, that's when it's a wait and watch as to so it's it's a wait and watch as to how big that particular project was. And of course, they've also had an approval of yet another project worth 187 crores. This time is from Maharashtra Metro Rail Corp. So these are the 3 positives that are working in favor of RVNL. But is it enough for it to be propelled up by as much as 35% in just 4 sessions? It's unlikely. So there clearly is another reason, and that reason potentially could be what we have, or rather what we can expect from the upcoming budget, or can we even expect some ground making, announcements as far as the railway sector is concerned in the upcoming budget. I'm going to leave all these factors out there for you to assess. Make your own assessment on RVNL. But Sharmila, your view here, and I'm not just talking about not just talking about RVNL specifically, but perhaps the entire railway sector, as has been the case for defense companies in the last week. Your overall view here.
I completely concur with you, because I think that most of these orders are very long gestation period orders. And what we've really seen is that we've seen a huge run-up in both the defense play as well as the railway space. And that has, of course, been, because of the kind of hype that has surrounded the order flows that have been there in defense as well as in railways. And we've seen these stock prices in the defense space go up, 2,000%, 3,000%. So it is a little logic defying, and it is ahead of valuations. Having said that, it is clearly these two sectors, defense and railway, are the sectors where the investor focuses. So I think if you have the stock, great, stay invested. But from a valuation perspective, I mean, nobody's looking at fundamentals, very honestly. So it's very, it's a very tricky sort of a question for me to answer. But I really wouldn't recommend a fresh buy. But I think if you had to stock, hold it, and because as I said, valuations really seem stretched at this point.
Okay, well, that's as far as RVNL is concerned, and of course related stocks. So there are a handful of others which would include something like an Aircon International and even IRFC, which is a finance company. All these stocks have in fact seen substantial traction. Even the private sector, something like a Jupiter Wagons or Titagarh Rail Systems are some of those buzzing, counters as far as the railway sector is concerned. That's something that we can keep an eye on. But let's move on and talk about, the new entrants on the block. We have two strong listings. One, of course, is the relatively larger pharma company, Emcure Pharma, which has a specialty in cardiology and gynecology. That listed at a 31% premium to its issue price. The other one is Bansal Wire, which also made a debut at around 39% premium to its issue price. A relatively smaller company in the wire space, but that also has a market cap of around 5,000 crores based on the current market value. Sharmila, have you been tracking either of these IPOs, and if you have a view on either of them?
Well, I may have tracked Emcure, but not really Bansal Wire. But just reading about them and the kind of subscriptions that they attracted, I think it sort of suggested that the grey market premium that they had, it sort of suggested that they would both list at a premium, which they have. I think tragically what happens is that if you had, like, suppose I had a positive view on Emcure, for instance. And so the current prices would have been, the kind of upside that I would have seen in the stock from the IPO price, and that you've done on the day of listing itself. So then it becomes a very difficult decision. If you haven't got the stock in IPO, what do you do? So then my simple logic has always been that, just wait it out for a couple of months and then enter the stock, because then, the sort of the people who are buying for listing gains and players like that, then they exit the stock, and then after about 30-45 days of the stock being listed, you get a more realistic view, sort of a price point, and you may have had one quarterly number out by then, and then you can take it from there and decide whether you want to buy fresh. But as I said, Emcure was an IPO that I liked. Bansal Wire again is a space that I like, but it's just, I think it's a little more, that place is a little more fragmented and competitive. So there again, now I don't know at this price whether the valuations justify, but Emcure, certainly, I think, you should take a look. Just allow the stock price to settle in it.
Right. Well, in fact, we spoke to both the managements about the outlook going forward. This is what they had to say. Listen in.
It has been a long journey, and from a very modest beginnings, today we are a pharma major. For the last decade or so, this company has been run in terms of systems, processes, etc. as a listed company. So the transition is going to be seamless and smooth. But of course, we are absolutely flabbergasted by the response where the issue was oversubscribed nearly 68 times. So we are looking forward to this exciting new phase in our journey.
Well, let's talk about your company a little bit for a minute. What would you like to convey to our investors?
No, I would like to say, that trust us, we are long-term players and we have a long-term perspective. And we, as a company, we are very bullish about the Indian market. We see a lot of growth opportunities in India. We also feel, that emerging markets, they mimic India. So to that extent, the strategy will be to focus on India big time and also on emerging markets. And we will also keep on launching, complex molecules in Europe and Canada, both the markets, we like.
All we can say is that, as we have grown in the past, this is the same that we want to continue even this quarter or this year. And to do that, we've already started production in the new facility that we are coming up with, which will take our capacity to almost 2.5 times of where we are today or where we were last year. And that production is already started. It is going good. We have good orders in hand. Right now, all we have to take care of is how much and how fast can we produce. So the quarter, in fact, the last quarter has been a little better than our expectation as well. So I hope, I am sure that you will see good results. We'll try and disclose the numbers as soon as possible as well for the quarter. And so we have done well in the quarter is all I can say.
Okay, and the final theme that we want to talk about is metals. A lot of these metal companies, specifically non-ferrous companies, are under pressure today, but that's because the related commodities are also coming off in the respective commodity markets, case in point, aluminium and copper. That said, at the moment, Sharmila, anything that stands out for you? Do you think that this is an opportunity to get into metal sector? Your view in general?
Yes, absolutely. I think that if we see a further correction, it will offer us an opportunity to enter, because from a valuation perspective, these were looking a little expensive. And as you said, this is a sector that completely moves in alignment with what is happening in the LME or the dollar index, and it's influenced by a lot of international factors. That said, I think you also need to see where you are, in the cycle in a domestic context, and I think there is where my comfort comes from. So I think that if you see a further correction, it will give us an entry point. But yes, I think that the valuations looked a little rich, and if it corrects more, then use it as an opportunity to enter.
All right, Sharmila, on that note, taking a moment to thank you for joining us and taking us through your views on the stocks and themes that we wanted to talk about. With that, it's also a wrap on this edition of Hot Money. Lots more lined up on the other side. Stay with NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the long street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
एक ही लक्ष्य, नेशन फर्स्ट, एक ही इरादा, 2047 विकसित भारत।
Specific PIN codes are not basically given insurance. Specific occupations are not provided insurance. People who do not have educational qualifications undergraduate are not provided insurance. So in short, term insurance is a very elite product for a country like India. Right?
Okay.
If you look at the percentage of people, when you cut down all these cuts, like when you put all these cuts into picture, it will not be even 1% of the population of India.
Headlines you start your day with. What matters worldwide is now in the palm of your hands.
Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
People tend to borrow from their own resources to pay for their kids. The thinking, of course, is and look, this is an Indian concept, is that I take care of my kid now, my kid is going to take care of me down the line. Is that wrong though?
I don't think that today's generation thinks like this. Like today's generation who has kids in 20s, I'm saying, once.
Hello and welcome. You're watching Budget Trade and this is Samina Nalwala. Railway stocks are literally on a high and with fresh highs ahead of the union budget. While the budget, which is going to be tabled on the 23rd of July, is seen as a people's budget, what's sticking for the railway counters? Stocks like RVNL, IRCON International, IRFC and a whole other bunch of listed railway companies were trading at their all-time highs. On Friday, the Union Minister Ashwini Vaishnav announced the production of 2,500 new general passenger train coaches and approved an additional 10,000 coaches. Talking about railway infrastructure, he said that about 5,300 kilometers of railway tracks have been added so far this year and about 800 kilometers have been added. Well, keeping that commentary in mind, budget stocks, or Modi stocks like they're more popularly known as, have been seeing aggressive buying interest. But let's go to my colleague Anushi first, who takes us through what is the sector expectation from the much anticipated budget in a few weeks.
With the upcoming budget, railways continues to remain in focus. We've seen a sharp jump up in stock prices of some of these railway counters. Look at an RVNL, 38% of gains in this last 1 week itself. Now, if you even look at 1 year, there has been a rally in most of these counters. Here again, IRFC leading the pack, 500% gains over the count, while other railway stocks also, if you see, most of them clocked about a 2 to 3x times of growth in their stocks. But what is happening? What's the budget allocation over the years? Let's understand that. So if you look at the FY22 to 23 period, 1.5 lakh of crore of allocation from the budget side for the Ministry of Railways, which has then increased to about 2.4 lakh crores, so 50% jump that we are looking at. Coming to the interim budget of this year, 2.52 lakh crore is what was the allocation. But you know what's interesting over here? If you go back to the 2003 to 2004 to 2005 period, the allocation was 8,000 crore. So we are seeing a sharp jump in this allocation over the years. So with this, again, we can just look at the railway track that they have built over the years to get a better sense. So during 2004 to 14, there was about 15,000 route kilometer built. But if we go back to 2014 to 23 period, we are almost seeing this number doubling to about 25,000 route kilometer. Again, major projects that continue to remain focused for this budget and even the previous budgets include the Gati Shakti cargo terminal, the Vande Bharat trains, Bharat Gaurav trains, as well as the Amrit Bharat stations and trains. Again, key highlights of this interim budget include implementation of 3 economic railway corridor programs. This was about energy, mineral and cement corridors, the port connectivity corridors, along with high traffic density corridors. But what stood out for this budget was the conversion of 40,000 conventional rail bogies to Vande Bharat standards. So here, some of the key players that continue to remain in focus include Titagarh Rail and Jupiter Wagons. But other than that, also there were some key developments which happened over the year. This includes Cabinet approving about 6 multi-tracking projects across Indian Railway in 6 states. This project is estimated to be around 12,000 crore and this will be fully funded by the centre. So with this, we will be seeing about 1,020 kilometer extension in the existing network of Indian Railways. So these are some of the prime budget expectations that we can see for Ministry of Railways this time.
Interesting, sharing the markets already running ahead of themselves with regard to those expectations. But we have with us Ashish Mudani, Senior Vice President and Co-Group Head, Corporate Ratings of ICRA, joining us to talk to us about a relatively smaller sector, but nevertheless very important at this juncture. Thank you, Ashish, for joining us this afternoon. Ashish, there's so much of excitement, conversations. We've seen the stocks run up significantly in the last couple of weeks to the run-up to the budget. The interim budget was, exciting for rail counters. But as we go into budget 2025 on the 23rd of July, what do you think is going to be the big bang announcements for the railway sector? To begin with, actually, will there be any big bang announcements in this, for the railway sector?
Yeah, hi, Samina. Good afternoon. What we are expecting at the overall capital outlay level, let me just talk from a broader perspective, then I come back to the railway subsequently. We are not expecting a major deviation from this 11 lakh crore number that has been announced during interim budget. Because if you look at the first 2 months of the current year, that is April and May, the overall capex outlay is down by almost 14%. Now, Q2 being a leaner quarter, so a lot of ramp up is expected in Q3 and Q4. So we are not expecting a major hike or outlay increase in the whatever was announced in the interim budget at a broader level. But one should note that the 1.6 lakh crore delta that has been announced in the interim budget from the last year, the capex incremental, out of that 70,000 crore delta is largely driven by an item which is classified as a new scheme. Now, because of that, what is interesting to see is how that amount of 70,000 crore get allocated within various ministries. So that is one thing that needs to be watched out for in the coming budget. But if you look at the railway outlay, capital outlay, it has grown by almost 12% CAGR for the last 5 years. And that is very, very impressive. Even the number that you were showing some time back, while the year-on-year outlay may look modest in a low single digit, but if you compare it with the FY23 number, it's almost 50% high number. So there has been a strong ramp up that has already happened. Now, what has benefited out of this is largely, if you look at the two specific segments, while we are talking about the incremental track outlay, we are talking about multiple wagons and rolling stock manufacturer benefiting. But two specific thing I need to highlight over here is the outlay which is towards the rolling stocks, and also the Amrit Bharat station, or what we call about this railway station development. A lot of impetus is over there. Just to give out certain numbers over there, in FY23, the items under customer amenities, which is broadly cover the station development, that is only 2,200 crore. Now that has been hiked almost 7 to 8 times in the current budget. Now it is almost 16,000 crore plus. So the players in these segments are expected to benefit. Similarly, if you talk about the wagons and the rolling stock manufacturer, because of this all-time high order awarding that has happened, so all these wagon manufacturers are sitting on a very strong order book, and they are also going to significantly benefit from this particular thrust. But if you look at the broader thing, we are not expecting any material or major deviation from what was announced in the interim budget. Over to you, Samina.
Right. Ashish, just take a step back, and you talked about the capital outlay. Now, I want to broaden this discussion, not just sticking with railways, but logistics as whole as well, because, I was having a chat with Tata Projects, and they said, for India to become a manufacturing hub, we have to bring down logistics cost. So I want to bring in road as well into this conversation. How do you think, or who do you think could be a key beneficiary of this increased capital outlay in terms of allocations? Which sectors stand to gain most in this space?
Zamina, like my team also tracks the road sector. So when you talk about road and railway combined, both of them are a major beneficiary in the last 10 years. And the statistics also showcase that. The current year, the number looks modest if you look at on a YOY basis. But if you look at in the broader perspective of the last 5-year or 10-year horizon, the number looks impressive. And both is like what you rightly told, if you want to become a manufacturing hub, we are talking about a 5 trillion economy, we are talking about reduction in the logistics cost. Railway will definitely play a very vital role, and so is the road segment. So both this segment, I don't want to differentiate between any one of them. Both of the segment will be a major beneficiary, and will continue to see a strong impetus going forward also.
Right. While this is going to be a significant beneficiary of the government's outlay and capex plans, What do you feel, or which companies do you feel stand to benefit the most? Because some may argue that a lot of this may already be in the price. You know, one thing is winning orders, but what else needs to, before we go into companies actually, what else needs to be done in this budget to improve the balance sheet of these railway companies, improve cash flow, and generally make them or bring them up to speed with some of the other private sector players?
So, I mean, if you ask me, the two specific items that we feel, or we feel that needs to be focused on from the railway side is, one is the monetization thing. I think there is a significant lag to what was the initial target and the number that has actually been delivered. So, in monetization front, there is a lot of scope. And the second space is the public-private partnership. While in the road segment, we have seen a strong ramp up and things have largely stabilized, and the lenders are also very comfortable over there. But in railway segment, we have not seen much of the public-private partnership over there, and that's where the government has to put a lot of funds. So if the public or the private money comes over there and that gains traction, it will be beneficiary for the overall everybody in the system, and all the stakeholders will benefit out of it.
Right, and in terms of railway stocks, Ashish, or companies, who stands to benefit the most from this budget 2024-2025? Of course, what stands out for me is the fact that there's every morning RVNL is either bagging an order locally or internationally.
See, Samina, I won't like to comment on any company-specific thing, but as a sector, if you ask me, we have seen a lot of competition in the road segment in the last 1 year because of decline in the order inflow. So many of the civil construction entities, they have received station development projects, and they are building on their order on this particular segment. So this is one pie which is going to benefit some of those EPC entities also, who are already executing projects or getting new projects in this particular segment. Wagon manufacturers, if you have seen that order book is pretty strong for the next 2 to 3 years, so they are also well placed on that front.
Right. Ashish, also, while you can't talk to me about specific companies, but in terms of preference, do you prefer the private players or the public sector, PSU players? Because the gains are very obviously in the PSU names, more than what we are seeing amongst the private names.
Samina, if the capital outlay is going to increase, everybody in the ecosystem will benefit. So even if RVNL is getting these orders, eventually some of this will get subcontracted to the private players also. So at a broader level, if you look at almost all the players who are in the system will benefit out of it.
Right. And very lastly, Ashish, while you can't comment on stocks and you would like not do that, just at a more macro level, there are wants and there are needs, right? What do you think is imperative for the rail sector to see in this budget announcement?
Okay, so if you
and in terms of prioritizing the needs.
So it's a very tricky topic because there are multiple priorities for the sector. But if you see from the government's point of view, 2 or 3 things very clearly stands out. One is the monetization. I think that needs to gain traction, and some measures needs to be taken in place so that they get certain money out of it, which to fund incremental growth or capex in the railway sector. Second is the public-private partnership. Private sector needs to be encouraged over here. And the third, again, going forward will be the investment towards safety, and I think that will continue to be I think a lot of investments have happened in the last 4 or 5 years, and I think this is one of the key priorities for the government, and this will continue to see a lot of traction going forward also.
Right. Thank you very much, Ashish. Great talking to you and getting a perspective on roads and rails and what the sector expects from this much anticipated budget. We'll take a quick break. On the other side, we'll talk to Ashish Chatramuta from a markets angle of whether there is still a trading opportunity between now and the budget on rail stocks.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the long street deals, finance and policy news that could shape your tomorrow, the newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
एक ही लक्ष्य, नेशन फर्स्ट, एक ही इरादा, 2047 विकसित भारत।
So, there is good debt and bad debt. I think there's debt which helps you create assets, which we would classify as good debt. For example, if you take an education loan for something which is truly a good program, good course, which is going to take you further, I think that's good debt. It'll pay back, it will take some time, but it'll pay you back well. The problem is if you over leverage, if you take too much debt simply because you assume that the future is a replica of the past.
As Vishal just said, there's good sugar, there's bad sugar. Your good sugar is going to be from your fruit sources and stuff like that, right? And of course, then there's refined.
Back, you're watching Budget Trade. We have with us Ashish Chitramuta, ED Portfolio Management Services at JM Financial, joining in. Hi Ashish, thanks for taking the time out to talk to us. Ashish, to begin with, and there's so much of euphoria in the markets. We made a new record high yesterday. Of course, today we've taken a little bit of a break. What could, in your opinion, happen to the markets following the budget? Will it continue to make all-time highs, or do you anticipate a drastic correction or a strong bout of profit taking?
Good morning, Samina. So as far as broader markets are concerned, yes, we are hitting fresh all-time highs, but we need to check few of the data points in the sense that if you look at the total profit made in 2019 of Nifty 50 companies and 2024 profits, ideally these profits have grown at a CAGR of 18%, and that's the CAGR we have seen in terms of market capitalization growth. Also, if you look at from a forward PE multiple basis, Nifty is trading around 20 forward PE multiple, which is at a slight premium to its 5-year average. At the same time, if you look at high frequency indicators, whether it's electricity bills or whether it's e-way bill generation, all these are in a very, very strong uptrend. And we are seeing a very strong GDP expansion, so almost 8% GDP growth we have witnessed. And in days to come, we believe that 7 to 8% is the GDP growth we are expecting. So keeping all this data in points, it looks like if any correction comes, it's going to be a buy and dip kind of opportunity. And from a technical perspective, we believe that we are in a very, very strong trend. And a lot of these sectors, whether it's IT, banking, financials, they have not contributed significantly in the last 1 year bull run to the broader market. So looking into this, we believe that if this sector starts to contribute to this rally, then there's a further leg to the rally. So I think any dip of 4 to 5% would be a very good opportunity to add onto the markets. So we don't expect any significant correction in the broader market. And if any correction comes in the range of 5 to 6%, that would be an ideal opportunity to add further positions into the market.
Right. Ashish, but at the current juncture that we are at, are you open to putting fresh money to work within budget trades, so railways, defense, fertilizers? These are stocks and sectors that have been rallying up on anticipation of a budget that could be favorable to the sector. But what I want to understand is, should somebody take a fresh bet just ahead of the budget? Is that a good tactical trade?
So, Samina, I'll give a disclosure that, in terms of our PMS in the last 15 months time frame, we have been building a lot of positions in defense and railway, and in fact power also. So these were the three sectors where we were significant overweight, and actually a lot of these stocks in our portfolios have gone up significantly in the last couple of months, whether it's into defense or railways. So as far as fresh allocation is concerned, yes, the risk reward looks little stretched at this point of time. But in terms of opportunity size, we believe there's a phenomenal opportunity which is being seen in this space. But definitely from a valuation perspective, we are not very comfortable. But yes, in our portfolio, we are holding these names and continue to hold these names because our entry price and the current levels are giving us that comfort. But if the fresh allocation comes, then I think one need to be little tactical or kind of create a position in a staggered manner rather than at one go. Now, in terms of opportunity size, first thing which I would like to point out is if you look at financial year 13, the railway capex was close to 49,000 crore. But in financial year 23, this capex number was close to 2,45,000 crore. And in financial year 28, we expect this railway capex to reach almost 3,80,000 crore, which means from current to financial year 28, we are expecting a 10% CAGR in terms of railway capex. And if this happens, then there is going to be a lot of opportunity which we are going to witness in the wagon segment, in the Vande Bharat segment, in the metro coaches segment. And that's the reason companies like Titagar Wagon, as a disclosure, we have been holding Titagar Wagon since 320, 330 in our levels in our portfolio. And this stock has, we started tracking the stock when the stock was doing a monthly wagon production of almost 75. And currently, this company has crossed a monthly capacity of almost 1,080 wagons a month production. And now they are looking for passenger coaches also. So that's a new optionality which is coming into the business. So keeping this in mind, I think it's a good opportunity, but stock is at an elevated level. So we suggest that any good dip of 7 to 10% correction in these stocks would be a good entry point for stocks like Titagar Wagon or Jupiter Wagon. Or for that matter, a company like BML, which is into metro coaches, which is into Vande Bharat opportunity, and also opportunity of defense and mining construction is also there in BML. So these are the names which I think on any dips, this opportunity is really large, and these companies will be a big beneficiary of this opportunity. But as a disclosure, we continue to hold Titagar Wagon and BML in our portfolios.
Right. With that disclaimer, Ashish, the risk reward may not be so favorable if you've got to make fresh allocations to some of these railway stocks. But if one wants to, make use of the current opportunity, and if you do get that correction of 5 to 10%, beyond the three names you mentioned, would you add any more railway stocks in terms of preferences? How about an RVNL, because that seems to be winning orders pretty much every single day? RailTel and IRCTC, do those also look good to you from now until the budget? It's a tactical call, fundamentals and technicals in mind.
Yes, so I think RailTel is a very good opportunity according to me, and I think we, as a disclosure, we have this stock in our portfolio as well, because we believe that in terms of RailTel, Kavach is a very big opportunity. We have so far deployed almost 1465 route kilometer Kavach as an opportunity, and this is a very large opportunity which we believe is going to come. So obviously in the public sector space, RailTel is going to be a big beneficiary of this entire Kavach opportunity. Apart from that, some of the private players like HBL Power is also a very big beneficiary of this Kavach opportunity. So as a disclosure, we continue to hold RailTel and we continue to like it from a technical perspective even at current levels. My sense is stock is forming a very, very strong base after consolidating for last 6 months. So there is a strong support at 10% lower level from in RailTel. And looking into the long-term chart, it looks like stock is headed towards 700, 750 kind of trajectory. So our preferred pick in this entire space would be RailTel. With a disclosure, we continue to hold the stock in our PMS also. As I mentioned in the wagon space, it's Titagar and Jupiter Wagon, which looks very promising. BML is one stock which we like from this perspective. Also, if you look at from an electrification perspective, or companies like Siemens as an MNC company is also going to be a big beneficiary of the railway capex which we are going to witness. Stock has already seen a very strong rally, but my sense is stock is forming again a very strong base around 7,400 kind of trajectory. So I think Siemens is also one stock which looks very good in the large cap MNC space for playing this entire railway opportunity.
Ashish, I'm going to be a little more greedy and just move the conversation beyond rail stocks. Any more stock ideas, strategies that one could consider for the upcoming union budget where you still feel that there is a favorable risk reward?
Yes, so I think Samina, power is one space which looks very promising. We have been very constructive on the defense space, but the stocks have seen a massive rally. We continue to like this defense opportunity because of the strong order book, because of a strong, I would say, the revenue visibility which we witness, because of the indigenization factor. We have seen for a company like Bharat Dynamics, which used to do a 65% indigenization at one point of time, is now doing an indigenization close to 91%. So the operating margins have jumped up. Same is the case for a company like Solar Industries, which is into explosives. The current top line almost 15% comes from defense, and it is going to go up. So these are the opportunities which looks promising, and as a disclosure, we continue to hold these names. But from a current risk reward perspective, I think power is one space which is offering a very strong risk reward. Within that, I think as we say that the current capacity from 176 gigawatt is going to become 500 gigawatt, which implies a 17% capacity CAGR growth in the renewable energy segment. So obviously different companies, whether it's NTPC in the power generation, which is going to create almost 30 gigawatt of renewable energy capacity. In terms of grid, I think grid connectivity, power grid would be a big beneficiary of this trend. In terms of high voltage, HDVC player, Hitachi Energy or Power India, which we call today, is a company which is going to be a big beneficiary of this entire grid connectivity space. And then some of the wires and cables player like Apar Industries. These are the names which we believe are going to be big beneficiary of the capex which we are going to witness in the power space, and these companies still offer reasonable risk reward. As a disclosure, we continue to hold these names in our portfolios.
It's amazing. We're always, have people and viewers writing and asking for mid-cap ideas, and some of the names that you mentioned will, of course, make good investment opportunity. Thank you, Ashish. It was always good talking to you. Have a good day, and we'll speak to you soon.
Thanks, Amin.
With that, we're completely out of time on Budget Trades. Thanks for watching.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the long street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
एक ही लक्ष्य, नेशन फर्स्ट, एक ही इरादा, 2047 विकसित भारत।
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
People tend to borrow from their own resources to pay for their kids. The thinking, of course, is and look, this is an Indian concept, is that I take care of my kid now, my kid is going to take care of me down the line. Is that wrong though?
I don't think that today's generation thinks like this. Like today's generation who has kids in 20s, I'm saying, wants to live with their children. So here's what it is. You do that and then you're dependent on your kids, or you be selfish and try to figure out a balance, and then you're living life on your own terms. So I think it's really a question of, how do you want to have your future life, right? Where you may not necessarily be earning to pan out.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
extend losses in afternoon trade. Nifty trades below 24,300 while Sensex falls below 80,000. Broader markets underperform benchmarks. All sectors drown in a sea of red, barring marginal gains for FMCG. Auto and metals decline the most. Mahindra falls over 6% as key SUV makers slash prices of its top-end variants. The company's celebratory pricing is for a period of 4 months only. And strong debut on the bourses for Emcure Pharma. Shares list at a 31% premium to its issue price. And Austria says Vande Mataram to PM Modi. After a successful visit to Russia, PM has landed in Austria, the first Indian PM to do so in 41 years. Hello and welcome. You're watching Market IQ on NDTV Profit. I'm Smriti Chaudhary and I'm also joined by my colleague Varsha Chandnani. We have a management to talk about today, but before that, let's take a quick check of where the markets are currently at. The Nifty 50 index down today, bit of a softer day for the markets, down about 0.6% or thereabouts. And that's it. This sort of weakness in the market seems to be a broad-based weakness today, and well, it was a long time coming considering the kind of highs we've seen in the market. You look at the Nifty 50, Nifty mid-cap index down about 0.7%, small-cap index also down about 0.8%. Even on the sectoral front, it's pretty much a sea of red. Like I said, it's the auto index that's down about almost 2% right now. There's banks that's in red as well. There's metals, media, PSU Bank, all down over 1% in trade. Let's pull up the contributors of the Nifty 50 and you'll see there as well. It's Mahindra and Mahindra that's contributing to the declines, followed by heavyweights like HDFC Bank, Reliance Industries. On the other hand, you have something like a Bharti Airtel, Power Grid, now slightly in the green. You have Maruti also contributing a little bit positively to the index. That's pretty much the case on the benchmark. Now, let me also mark a couple of stocks that are doing well today, despite what we're seeing in the markets. You have something like an RVNL that's gaining in trade after an order win. They won an order of about 187 crore from Maharashtra Metro Rail Corporation. That's the Nagpur Metro, up over almost 9% in trade. You have something like a Rajesh Exports also doing very, very well on a tear today. However, there does not seem to be any particular fundamental trigger to these gains as of now. So up about almost 12% in trade. The two of the counters that are doing exceptionally well in the markets like we're seeing today. But the focus today is Shalby. The company came out with its first quarter earnings. Revenue and EBITDA are up while margins and net profit are down on a year-on-year basis. I'm now being joined by Shanay Shah, who's the president, to talk more about the numbers. Welcome, Shanay. Thanks for joining us on NDTV Profit.
Hi, good morning. Thank you for having me.
Pleasure's all ours. Let's start off with the numbers. While revenue and net profit, we saw in both of these things advancing, there was a bit of a weakness on the net profit and margin front. Do kind of tell us how was this quarter for us, for Shalby, of course, and what do you see it for the next next 3 quarters for FY25 as a whole?
Sure. So from the company's perspective, the results have been in line. So there are 3 parts to it. One is, of course, if you look at the overall numbers, then we have grown at a consolidated level at a north of 20% kind of growth rate. So happy with that. The EBITDA growth has been north of 15%. And in this particular quarter, we had not taken the deferred tax asset for our implant business, and had we taken that, and we had taken it in the same quarter last year, the PAT would have been, the absolute number would have been pretty much along the same line. So it is basically because of that accounting that we see that the PAT has dropped a little bit. But otherwise, the business has grown, and the inpatient count on the hospital side have grown more than 15%. The outpatient count have grown more than 15%. The new Delhi acquisition that we have made, has integrated well, and it is near EBITDA break even as we speak. So things are on the right track from the company's perspective.
Hi Shanai, Varsha here. So if you see, we've noticed that EBITDA margin for the company is down at 16% compared to 18% last year. So can you explain the reasons for the same, and where do you see this margins? Because I understand that we also had margins of around 22%, in one of the quarters.
Well, I think if you look at the standalone numbers, which is everything except Delhi and the implant business, we are at a 24% EBITDA margin. So the core hospital business, apart from the last two acquisitions, has done very well for us. The other two businesses, which is the implant business as well as the Delhi hospital business, have been relatively recent, and we have broken even on the EBITDA level on both of these acquisitions. However, what has happened is that because of depreciation and finance cost, you see that the PBT levels have gone down, and which is why you see overall that the margins have dropped, because the implant and the Delhi business have added to the top line, but not meaningfully to the EBITDA, and that's why you see the margin has gone down. But if you look at the consolidated level, the EBITDA levels, as in which were at a certain level in Q1 FY24, have grown by 15% in this quarter year on year.
All right, let's talk about the implant segment like you mentioned. So you reported about a 25 crore business there in that segment, and you have a target of about 100 million to achieve in this business. Big target there. Is there a timeline for that? And also, how much do you think you will be able to achieve in FY25?
Sure. So if you look at the if you look at the year-on-year number, we have grown at about 60% in the implant business. We were at about 16 crores last year. We are at 25 crores in this year. For this fiscal year, we have targeted anywhere between 130 and 140 crores to be done. Yes, and in fact, that will happen at a lower or higher single-digit EBITDA margin. And in terms of the long-term goal, yes, medium to long-term, we want to get to $100 million, and we are confident that that will happen by 2030 for this business.
Also, Shanai, if I want to ask about your ARPOB, we did see growth of around 14%. What were the major factors contributing to this growth? Did you implement any kind of price hikes, or was the growth largely volume driven?
So the price hike has not been very significant. It is largely for two reasons. One is that the specialty mix has changed. So arthroplasty, which is knee and hip replacement surgeries, as a proportion of the revenue has gone up, and that is one of the reasons why you see that the ARPOB had grown. And secondly, this was the first full quarter where we saw that the Delhi acquisition has really kind of, if you look at it as a whole, it has added to the overall ARPOB, because the ARPOBs in Delhi are typically higher, and when you consolidate the numbers, that pulls up your overall ARPOB by a little bit. So that's the reason why you see that the ARPOB has grown.
Also, if you see, the occupancy rate stands at 48%, which is down almost 151 basis points. So where do you aim to take this?
Well, the occupancy growth has actually it's not degrown, it has grown. It's just that the overall operational beds have been added in this quarter because of the Delhi acquisition. So that's the reason why you see that the overall bed capacity has grown. And Delhi currently obviously is operating at a very low occupancy comparatively, because it is a relatively new hospital. And that's the reason why you see that the occupancy has dropped. But if you look at our numbers that matter, which is the outpatient count number, the inpatient count number, they have grown at 15% on a year-on-year basis.
All right, let's talk about your expansion plans now. As part of your presentation, you mentioned about your plan of expanding in Mumbai, Nasik and Rajkot as well. Is this a FY25 plan? What kind of number are we looking at in terms of capex?
Sure. So currently we stand at about 170 crores of net debt as we speak. And we are planning, in fact, we are launching Rajkot. The soft launch has already happened, and we'll launch Rajkot in this particular quarter 2. And we also have the Mumbai project, which is coming up, which is the Asha Parekh Hospital and BCJ Trust. There we will be looking at investing anywhere between 250 to 275 crores for a 200-bed facility. So that is basically in the pipeline. And we are confident that we will be able to receive and get the charity commissioner's approval in the next few weeks.
What kind of contribution are we talking about to the top line in terms of these expansions?
Well, I think the ARPOBs in Mumbai are in the range of 50,000 to 55,000 rupees. And I think we are making anywhere between 180 to 200 beds. It's going to be a multi-speciality hospital, which will be doing all high-end treatments. We'll be doing a lot of medical tourism work there. So I think with that, you can assess, the kind of numbers we can be doing, on the top line over there.
All right. Final question, Mr. Shane. If you can give us some sort of a guidance for FY25 on revenue and even on net profit, if you have.
Sure. So as such, we are not giving guidance, but if I talk of, the kind of growth on the standalone business, we'll be doing about 20%. We'll be adding, the Delhi numbers will also add to the top line along with the implant numbers. So we expect anywhere between 1,100 to 1,200 crore top line for this particular year, which will be north of a 25-30% kind of growth.
Right. Thank you so much, Mr. Shane, for joining us here on NDTV Profit. It was a pleasure having you on the show today.
Thank you so much.
Well, it's time to slip into a short break now, but we'll be back with more news and updates on the other side. Stay tuned.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the long street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
एक ही लक्ष्य, नेशन फर्स्ट, एक ही इरादा, 2047 विकसित भारत।
So, there is good debt and bad debt. I think there's debt which helps you create assets, which we would classify as good debt. For example, if you take an education loan for something which is truly a good program, good course, which is going to take you further, I think that's good debt. It'll pay back. It will take some time, but it'll pay you back well. The problem is if you over leverage, if you take too much debt simply because you assume that the future is a replica of the past.
As Vishal just said, there's good sugar, there's bad sugar. Your good sugar is going to be from your fruit sources and stuff like that, right? And of course, then there's refined sugar, etc., which comes under your what's been labeled as bad sugar, right? So to come down and get into certain financial terms or bringing it into play, I would say budget for it.
Welcome back. You're watching Market IQ on NDTV Profit. Now, Mahindra & Mahindra is the stock in focus today. It's down almost 7% in trade. This is after the company announced certain price cuts and discounts on a range of its SUVs. But that's not the sole reason of M&M falling. What are the other key reasons? I'm joined by my colleague Puneet to bring us a report on that.
Has eroded a market cap of roughly 25,000 crores in trade today, and we see that there could be 4 potential reasons for this. The first is, of course, the longer waiting periods for Mahindra & Mahindra that the customers have to wait for. Top variants of the XUV 700 had waiting periods of roughly 8 months for receiving their particular product, and this has not been an issue which is ailing recently. Over the last 12 to 18 months, we have been seeing that the waiting periods haven't come off for some of the top variant products such as the XUV 700. The second one could potentially be the absence from the hybrid space. Now, we did see the UP government notification which came in yesterday, which they will be waiving off registration charges for purchase of hybrid cars. Now, they have a current policy of roughly 10% tax over cars of roughly 10 lakhs, and this could potentially save buyers of with roughly 1.8 to 2 lakh rupees of registration charges that they won't have to pay. This will also help them reduce the parity between petrol cars as well as hybrids. Now, Mahindra & Mahindra is completely absent from this space, just like its peer Tata Motors. And speaking to us after the Q4 results, Mr. Anisha, the managing director, did mention that they don't see the need to enter this particular hybrid space right now. The third key reason could be the production increases. Now, it has been increasing per month, but so has the demand, because launches such as the 3X, so the entry level variant has waiting periods of 32 weeks. So the production has been increasing per month, but not meeting in line with the demand kind of that Mahindra has. And finally, the price cuts which we've seen yesterday by Tata Motors as well as the other players such as Maruti, who have done the price cuts. Now, specifically, they have reduced the price cuts for Tata Motors in the SUV space. Now, Mahindra has also matched the same in some of the variants, but customers will now look at waiting periods as one of the key things. When you look at the other 2 key issues in this particular space is, of course, the higher inventory as well as the price cuts. Now, Maruti has an inventory of roughly 38 days. So this whole space is buzzing in trade today. Finally, Maruti has also offered cash discounts in this particular month of July, and both the entry-level car variants have also some discounts. So Mahindra is, of course, lagging in trade today. Maruti did start upwards of 3% in trade on the back of hybrid cars as well as discounts, but it'll be interesting to keep a look out of this space going forward as well.
Right, thank you so much, Puneet. For those reasons, now he rightly mentioned it's the whole auto pack that's buzzing today, and on that we spoke to Mihir Vora, CIO of Trust Mutual Fund, earlier today and asked him about the outlook on the sector and the reason it might be in a downturn. Listen in.
Given the fact that auto had done so well as a sector in the last few months, maybe it's taking a breather. We also must understand that this year is a little bit skewed in terms of the wedding season. So, for example, there were hardly any weddings in the last few months, and even in July there are only a few days of weddings, and then again after August there are very few dates. So it's I think one of the years with the lowest number of days which are auspicious for weddings. So we might be seeing a little bit of seasonality impact because of that too.
Right, so that was Mihir Vora talking about the seasonality impact on the auto space. But let's shift focus now to Delta Corp, which is the company that reported its first quarter earnings. It's up in trade about 1%. Now, the revenue fell 30%, while the net profit dropped at whopping 68% on a year-on-year basis. My colleague Mahima joins in to give a sense of what these numbers look like beyond the revenue and the profit picture.
The company has been in pressure because of a lot of regulations since some time now, and the stock has also seen that pressure. Now, today the stock is particularly down because it came out with its Q1 FY25 update results, and the revenue was down around 30%, EBITDA down 68%, margins have significantly squeezed down from 37% to 17%, and net profits were down around 68%. Now, a couple of reasons for this particular result, which was not up to the mark? Well, firstly, Delta Offshore Developers Limited, which is a foreign subsidiary of the company, has been struck off, and the loss on disposal of this subsidiary was recorded as exceptional item. Although this was not one of the major reasons why the margins did take this bigger hit. The major reason was that gaming revenues were down by around 25%, and compared to that, total expenses came down only by 8%. So this is one of the reasons why margins have significantly squeezed down. Now, despite of all of this, the board has recommended a final dividend of 1.25 per share. In terms of valuations, the company is trading at a PE of around 5.7 times, and in terms of stock performance, as I mentioned earlier, that the stock has seen some pressure since some time now. In terms of 6 months, it's down around 8%, and 1 year down around 41%. However, in the past 5 days, it was up around 8% because probably retailers were expecting a better Q1 FY25 update. So this is the overall view of Delta Corp and why it's down in trade today.
Thank you so much, Mahima, for those details. Now, on to primary markets. Now, two strong listings on D Street today. Emcure Pharma listed at 31% premium, while Bansal Wire debuted at 39% premium. We spoke to the management on the growth trajectory going ahead. Listen in.
It has been a long journey, and from a very modest beginnings, today we are a pharma major. For the last decade or so, this company has been run in terms of systems, processes, etc. as a listed company. So the transition is going to be seamless and smooth. But of course, we are absolutely flabbergasted by the response where the issue was oversubscribed nearly 68 times. So we are looking forward to this exciting new phase in our journey.
Well, let's talk about your company a little bit for a minute. What would you like to convey to our investors?
No, I would like to say, that trust us, we are long-term players and we have a long-term perspective. And we, as a company, we are very bullish about the Indian market. We see a lot of growth opportunities in India. We also feel, that emerging markets, they mimic India. So to that extent, the strategy will be to focus on India big time and also on emerging markets. And we will also keep on launching, complex molecules in Europe and Canada, both the markets, we like.
All we can say is that, as we have grown in the past, this is the same that we want to continue even this quarter or this year. And to do that, we've already started production in the new facility that we are coming up with, which will take our capacity to almost 2.5 times of where we are today or where we were last year. And that production is already started. It is going good. We have good orders in hand. Right now, all we have to take care of is how much and how fast can we produce. So the quarter, in fact, the last quarter has been a little better than our expectation as well. So I hope, I am sure that you will see good results. We'll try and disclose the numbers as soon as possible as well for the quarter. And so we have done well in the quarter is all I can say.
Bansal Wire talking about a good first quarter, and we'll see those numbers as and when they come out. But after concluding a 2-day visit in Moscow, PM Modi has now moved on to Vienna. Austria's Foreign Minister Alexander Schallenberg extended a warm welcome to Prime Minister Narendra Modi, highlighting the 75-year anniversary of diplomatic relations between the two countries. Upon PM Modi's arrival, violinists performed Vande Mataram, cheering the diplomatic relation between both the nations. Among strategic, political and economic discussions, the two countries will explore ways to further deepen their relationship and closer cooperation on various geopolitical challenges. Now remember, this is the first time an Indian Prime Minister has visited Austria in 41 years. In 1983, Indira Gandhi was the last PM to visit the country. Now, some national update. After incessant rains in Uttarakhand's Chamanlal, a massive landslide happened today when a portion of a hill disintegrated and fell on the road, and large rocks blocked the route at Chungi Dhar in Joshimath. Hundreds of people and vehicles were stuck on both sides of the road due to the landslide. The Badrinath highway was blocked in the morning and the authorities were clearing the debris when the landslide occurred. Now, the Securities Appellate Tribunal has now instructed Religare to comply with the SEBI directive, clearing the path for the Burman family to increase their stake. Remember, on June 19, SEBI had directed Religare to provide an undertaking with 7 days. Charu joins in with more details on this.
Hello. So the case is about an order that came from Security and Exchange Board of India on 19th June. It asked the Religare Enterprises Limited to give an undertaking saying that it will get approvals from RBI and other regulatory authorities and will basically clear the path for Burman family of Dabur fame to get more shares and get more part of the non-banking financial company, that is Religare Enterprises Limited. But the board of the Religare Enterprises Limited, in an attempt to basically block the deal, was not really listening to the SEBI directives before, and that is why this urgent order of 19 June was coming. And they have also appealed this order before the Security Appellate Tribunal. So today this appellate authority has asked Religare Enterprises Limited again to comply with the order by July 22, but in a partial relief to them has stayed the show cause notice that was previously given to them by SEBI, that was given to Religare Enterprises Limited and its board. Now we must understand that the Burman family has already gotten a stake of 25% in the company, and to get more and to basically trigger an open offer, they have been going down this path, whereas the board of the company has been trying to block the deal and has also filed a writ petition with the Delhi High Court regarding the same.
Right, thank you so much, Charu, for those details. Let's quickly look at the markets as well. You have the Nifty 50 still continues to be in the red, down about 0.7%. And let's look at the market breadth as well. Now, it continues to be in the favor of declines, very, very strongly in the favor of declines rather. It's almost a 3:1 ratio right now. Started off on a high, but continues to decline. And let's see how it plays out in the last couple of hours of trade as well. Let me also mark a couple of stocks. There's Credit Access Grameen. If we can pull up the chart on that one. Now this it's down in trade today, even after brokerages continue to remain positive on this one. There's Jefferies, if I'm not wrong, that came out with a note on this one. No, it was Goldman Sachs that came out with a note on that one. Apologies there. With a target price of about 1,784. They were very, very positive on the counter. They say that they did some stress test and they see a limited downside on that, and the risk reward remains attractive. However, not doing so well in trade today. But that's all that we have on the show for now. Do stay tuned to NDTV Profit for more news and updates.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the long street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
एक ही लक्ष्य, नेशन फर्स्ट, एक ही इरादा, 2047 विकसित भारत।
Specific PIN codes are not basically given insurance. Specific occupations are not provided insurance. People who do not have educational qualifications undergraduate are not provided insurance. So in short, term insurance is a very elite product for a country like India. Right? Okay. If you look at the percentage of people, when you cut down all these cuts, like when you put all these cuts into picture, it will not be even 1% of the population of India.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
People tend to borrow from their own resources to pay for their kids. The thinking, of course, is and look, this is an Indian concept, is that I take care of my kid now, my kid is going to take care of me down the line. Is that wrong though?
I don't think that today's generation thinks like this. Like today's generation who has kids in 20s, I'm saying, wants to live with their children. So here's what it is.
Hello and welcome to the Mutual Fund Show. My name is Neeraj Shah, and over the next 21 odd minutes, we'll talk about some key questions that, of course, you guys have posed to us over the course of the last 1 week. But a very interesting fund is getting launched, and while the general advice is that NFOs should be approached with caution, it's a product which deserves a conversation. It's a Tata Nifty India Tourism Index Fund, and I don't think I've seen too many products of this nature. So let's get in Anand Vardarajan. He's Chief Business Officer of Tata AMC to tell us about what this NFO is all about. Anand, great having you. Thanks for joining in. Interesting. For all the best, of course, for the fund. But interesting concept. To my mind at least, I haven't seen a product of this nature. What is this all about?
Thank you, Neeraj, for having me. First of all, you wouldn't have seen this because this is the first tourism index fund. It's the Tata Nifty Tourism Index Fund. I think just to step back a bit and think about this particular fund. If you were to think about per capita GDP, at 2,500, your roti, kapda, makan, etc. gets met, and any extra income that an average household earns beyond that can go into two things, which could be either expenses, which is discretionary in nature, or into investments. When it comes to discretionary expenses, travel really is a mainstay. And that is where we thought that a concept like tourism perhaps will gain attraction with investors. I think the reason is very simple. Any investments, if you were to do, we'll have to really look at not where the puck has been, but where the puck will be in future. And when you think about expenditure, I think a very good hack to think about where expenses will go is really to think about where the rich are spending today, the middle class will spend tomorrow. And when you just put that into context, I think tourism then becomes center of plate, because that's where everyone is going. People want to experience. There's a lot of buzz that we are seeing across. You have crowded airports, overbooked hotels, so on and so forth. And that we believe is perhaps becoming a sector to really watch out for. So very, very excited, like you mentioned at the start.
So tell us what is the kind of investor that should look at this fund, and what will the fund effectively do? What kind of companies, what are the risks to something like this? What are the kind of returns that people should anticipate?
See, one thing is for sure that this is a sectoral fund. I think sectoral stroke thematic fund. So to the extent of whatever risk appetite one has, one should be mindful that these kind of funds, which are narrow in nature in terms of focusing or zooming in on a particular sector, has allied risk of less diversification and so on. So to that extent, one has to really look at it as a high risk or an aggressive fund in their portfolio. And that should be really the mainstay as far as one's thinking is concerned before they consider investing in a fund like this. That having said, what are we looking at? I mean, we are investing across the entire value chain of tourism. When you think about tourism, a simple way to think about is get, set, go, stay, cherish. And when you think about get, you get ready by booking, the booking and the travel companies really come into picture there. Then you'll have the luggage companies, which will be a part of it. You could also have the aviation or airline companies, which could find feature here. Then you will stay in a hotel where you'll have several hotels that we are investing in, and there is a bunch of QSR, quick service restaurants that we are investing in. Plus, because there is infrastructure provider in terms of airports and so on, you will have the airport service providers also as a part of the index. So roughly about 20 odd. So this would be an index which will comprise at max of 30 stocks. We're starting with about 17 odd stocks, not more than 20% in a single stock. There are different weightages ascribed to different types of sectors. So you will have a hotel business which will have, say, about 32% weights to start with. An airport services company like the ones which we have in the index could find about 10 odd percent. You would have airline companies having a weight of getting capped at 20%. So those are the kind of companies that you will find featuring in this particular fund.
Got it. Has this been back tested for what is the kind of returns that something like this could have given in the past, or because this is a theme that you believe, as you said, where the puck will be over time, therefore past history may not have as much relevance? I'm asking a question, really.
I think we've looked at this sector very closely. Also, if I were to just step back a bit and look at GDP component, if you were to look at services as a component in GDP, IT services really stands out at some $187 billion. Tourism is actually $212 billion, a lesser known fact. And when you actually look at what all has happened, I think the important question to think is, is it tailwinded or a headwinded sector? Today, when you look at it, I think with the kind of infrastructure development that we've seen in terms of roads, in terms of new airports coming, what was 74 airports, I think in 2014 odd, now about 148 airports, the capacity almost doubling, access to, B and C and D tier cities through air. The fact that we are seeing hotel occupancy rates going up. I mean, all this, plus the fact that, from a government policy perspective, the UDAN scheme, which was to, get to, smaller locations and airport connectivity, or the Prasad scheme, like, for instance, the whole thing which was done in terms of pilgrimage tourism. So if you were to think about it segment by segment, there is one segment of pilgrimage tourism, there's one segment of business travel, there's one segment of leisure travel, and there's one segment of medical travel, medical tourism. And when you think about it, all these are kind of seeing very, very strong, growth trajectory. And that's what makes us very, very optimistic about what this could hold over the next couple of years. The fact that not even a single tourism company is still a part of Nifty 50, despite being such a large component to GDP, is also something which one may want to think about in terms of what it could potentially do if it continues to be tailwinded the way it is.
Okay, but any average returns that investors can anticipate? I'm not asking for a formal guidance, but with the knowledge that it's a sectoral fund and therefore the risk should be proportioned for accordingly, what are the kind of returns that can be anticipated?
See, I think sectoral fund, typically the nature of the beast is that it will be aggressive, and to that extent, it is fair to expect that it could have much higher volatility, and perhaps even return potential could be higher than what you would expect of a typical large cap or say a Nifty 50 kind of a fund. That having said, that's the best I can say in terms of what it could potentially do. But anyone coming with a 4, 5, 7 year kind of a time horizon, I think one can expect that this is a category which could end up doing pretty well for them.
Got it. I have one final question. How would something like this expand in scope? It's a sectoral fund, yes. So would it be restricted to 30 companies, or do you reckon with the primary markets the way they are, the scope of options available for a theme like this will expand in the next 2-3 years?
It's a passive fund. So, what we are not wanting to do is try to actively think and see what would underperform. I think like in any passive, you go on the winners and losers, and the fact that, the winners will obviously shake the losers out of the index, if in a perfect market environment. And that is really the belief. I think we've tried to be a little futuristic in terms of what all components could find feature here, which is where you have QSR, which can potentially, given the kind of growth trajectory, it looks very interesting from a long-term perspective, which is why you have the IRCTC, Ease My Trip, etc., which is the online booking and whatever is happening in that stack there. That again looks very, very interesting. So, these are some of the things that we have. So there is provision for us, which we've created at a sector level in terms of what could be there. We've thought through. But again, if there is something which comes up at a later date, it's for the index provider to then see if they can, fit it into the index.
Point well noted. Great. Anand, great having you today. Thank you so much and all the best for the NFO.
Thank you. Thank you.
Well, that's Tata AMC with their view on the new fund offer that is up from their stable. It's an interesting one. It's a passive fund, remember, as Anand Vardarajan spoke about, and it's a fund which is basing itself on tourism. It's the Nifty India Tourism Index Fund. So bear that in mind. But should you or should you not invest? Well, you heard him. If you have been able to make up your mind, then great. If not, we'll get in Himanshu Kohli, co-founder of Client Associates, on the other side to talk about that and more. Stay tuned.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the long street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
एक ही लक्ष्य, नेशन फर्स्ट, एक ही इरादा, 2047 विकसित भारत।
So, there is good debt and bad debt. I think there's debt which helps you create assets, which we would classify as good debt. For example, if you take an education loan for something which is truly a good program, good course, which is going to take you further, I think that's good debt. It'll pay back. It will take some time, but it'll pay you back well. The problem is if you over leverage, if you take too much debt simply because you assume that the future is a replica of the past.
As Vishal just said, there's good sugar.
Back with the Mutual Fund Show right here on NDTV Profit, and welcome on the show Himanshu Kohli, co-founder of Client Associates, for a variety of topics. I will start off though with the first one on the NFO that we were talking about. Himanshu, great having you. Thanks for taking the time out. And there is this, I don't know if you would have heard of this NFO, right? The Tata Nifty India Tourism Index Fund. Now, usually NFOs are a no-no. On top of that is a thematic one. They are very hopeful about the kind of prospects that this theme has in store. How would you, or what would you tell to somebody who's looking at you for advice on what to do with an NFO like this?
So first of all, Neeraj, I would say compliments to Tata's for coming out with an NFO within 2 weeks of the index being launched. So that's very, very fast. I think remarkable on their part to come out with an NFO so fast. Now, you know our views. In fact, we are not too fond of NFOs because normally an investor gets into an NFO that they are getting something at rupees 10, which is not the reality because you're entering into the market at that particular price. So this is something which we don't encourage NFOs to get into a particular fund. Second, this is also a particular index which has certain positives, but there is also a concern on the valuations and the quality of mix of stocks which you will get over here. So positives, if you see, there is a growing middle class. Travel has increased. Tourism is at its all-time high today. So there are so many things which are having tailwinds around this particular sector per se. But on the other side, if someone is entering today, one needs to see the valuations which are available over here. So today, if you see this sector, like when NSE comes out with a index, they also do the track record of last since 1st April 2005, which is fairly okay, decent track record. But today the price earning ratio of this index is somewhere about 55 to 60, which is far more expensive than what the market is today. So one is getting into something which is expensive. Yes, there are tailwinds which will make it grow over here, but one needs to see the price earning ratio. The dividend yield is far, far lower than the dividend yield of the broader index. It's 0.17, which is very, very low. So I would say definitely not as a part of the core portfolio. In any case, core portfolio will have more diversified schemes, diversified managers. And if they like, let's say a stock like Interglobe, they will in any case add it over there. But if someone is extremely bullish and still wants to take the advantage of the tailwinds which the sector is offering, even if it's at a expensive valuation today, maybe put it as a part of this satellite portfolio, which could be a very small portion, and get into it on a systematic basis. So I'm not very fond of NFOs. I'm not very fond of sectoral funds. I can say sectoral funds can be looked at only on the basis of satellite portfolios. And since in this particular scheme, this is the first offering in this particular sector which is available, so maybe one will have to go through the NFO route. So that is what my comment would be.
Got it. But Himanshu, is it necessary to pick up into an NFO? No, right? Because you mentioned that. And if there are other thematic funds available, would this theme rate higher than some of the other thematic options available currently?
So as far as we look at the valuations, which is a very, very important parameter, right, I am not very excited about this particular thematic option. There are other options. So let's say private sector banks today are available at a far better P multiples. So one can look at those also. So I'm not too excited about it, but there are certain stocks which are very interesting at a reasonable valuation. And if I go through a diversified fund, in any case, those managers will pick up those stocks.
True. Okay, so speaking of thematic funds, Himanshu, would love to understand, because you guys also probably run funds as well. Give us a sense of whether people should invest into a tech fund or an IT fund. It's thematic in nature. It may be making a bit of a comeback if the last few days are taken into account, but the scene out there not quite clear, and the valuations not as high as they used to be, but not as low as they were maybe a month ago. So it's a bit of a pickle. I would love for you to solve it for our viewers.
So, Neeraj, what we construct is a core and a satellite approach. Typically 75 to 80% is your core portfolio, which can be into well diversified across large caps, multi caps, mid and small caps. That is what one can just pick up, maybe two managers who are the best in each of these spaces, or maybe then a combination of index funds over there. Satellite could be constructed in case there is a certain view on a particular theme or a particular sector. That's where thematic comes into picture. So today I would say for a retail investor who is not having the benefit of an advisor, they can just stick to the core portfolio of diversified funds. But someone who has a view and their own perception is about a particular sector very positive, they can look at having a satellite portfolio. So I would say yes, IT could be looking promising from future point of view. It could be private sector banks, which could also look promising from a future point of view. There's a lot of infrastructure development which is happening in the country. That could also look promising from a future point of view. So depending on what your advisor is recommending you, you can build a very small portion of satellite in your overall scheme of things. Otherwise, stick to the mainstream diversified oblique index funds, which are also broadly diversified.
Okay. Well, viewers, I think the answer and the response is firmly clear from Himanshu Kohli. So there are no beating around the bush when it comes to thematic funds in general or the queries that I asked him about. Himanshu, thank you so much for that. Now, I have a couple of queries. There are a lot of people who've written to us. I've chosen one or two which I thought were apt for asking you. So one query is from a gentleman called Rajat Mishra. Rajat is aged 56 years. Rajat's goal is regular income. I'll try and make it as simple as I can, Himanshu. Rajat is saying that he's got a SIP of 50,000 rupees in Parak Parikh Flexi Cap and 25,000 in Nippon Small Cap Fund. He wants to invest 2.5 crores and retire in the next 2 years with a regular source of income. Should Rajat choose to invest this 2.5 crores as an SIP or as a lump sum investment? And if you can recommend a few funds for him, then that is what his query is.
Right. So first of all, Rajat needs to draw his financial plan. That is what I would say. He has been doing SIPs of 50,000 and 25,000 in the two respective schemes, Parak Parikh as well as the small cap fund. Now, ideally, if you ask me, I would, at this point in time, when market is slightly overvalued, and we use a valuation parameter across price to book, yield gap, and market cap to GDP. On our formula today, Neeraj, market is overvalued by 12%. So first of all, if he has to invest 2.5 crore rupees, our model will say he should invest 2.5 crores into 0.88. Let's say roughly it works out somewhere about 2.2 crore rupees. 2.2 crore rupees, if he is aggressive, he can invest this 2.2 crores in 6 months' time. If he is moderate, he can invest in 12 months' time on a weekly basis or a monthly basis. And if he is conservative, he can invest in about 18 months' time. And there also, something what he needs in 3 years to 5 years, he can invest more into balanced funds. And what he needs beyond 5 years, he can start doing the systematic investment plan into equity funds. And there also within equity, he could look at a combination of some large cap funds, some multi-cap funds, and some mid and small cap funds. So today we will recommend him 35% towards large cap, 50% towards multi-cap, and 15% towards mid and small cap. And that is how he can start building up his SIPs book. In case equity market falls in between, he can speed up or maybe add some of his last installments immediately, or the 12% which he is sitting on cash, he can build it up immediately. In case there is also a change in the valuation parameters of large versus mid and small cap, he can reallocate it at that point in time. But today, if he's starting to build up this portfolio in next 2 years' time, I would say, first of all, go systematic. Balanced funds or hybrid funds can be done in about 3 to 6 months' time. And equity funds, which can be done between 6 to 18 months' time, depending on his profile.
Okay. Now, Himanshu, did I hear you say at the start of this conversation, so thank you so much for this response, of course. Did I hear you say that you might be maybe constructive on banking? Because if so, I just want to know, because the second query is around that. Ashish Kar, who is age 30, is asking about what are some of the best banking funds that he can invest in. Now, let's assume that Ashish has got moderate risk appetite, moderate amount of funds to invest in and a moderate income. Is banking fund a good thematic fund to use, whether core or satellite? And if so, are there funds then you can talk about?
So yes, he can look at banking as a part of his satellite portfolio.
Okay.
Satellite portfolio. So let's say 15 to 20% what is the satellite portfolio, he can look at either a banking index or he can look at something like a Nippon fund over there, which is having a reasonably long track record. Something like that, he can look at it. I'm sure there are some PMS houses which are coming out with the banking focused schemes, or there will be some NFOs which will come. I will not recommend NFOs. And over here, since it's a sectoral theme or a thematic fund, I will not recommend a very long SIP over here. I will say do it systematically over next 12 weeks on a weekly basis.
Any of the existing funds, I mean, we're not asking for specific recommendations, Himanshu, but any illustrative examples, if you will, need not be an exhaustive list, of course.
So Nippon is a good fund. Okay. And then you can also go for an index fund in banking side also, because idea is to just get slightly higher exposure. So index fund would be a lower expense ratio fund. And Nippon also has a reasonably good track record.
Okay. Great. Himanshu, so good talking to you. It's been a while, but thank you so much for taking the time out and being with us and giving us your thoughts. I really appreciate your time.
No, thank you, Neeraj. Thank you so much for inviting me over here.
Well, the pleasure was ours. Well, that's Himanshu Kohli of Client Associates with his thoughts on the NFO, of course, and some of the thematic conversations that we had. I hope that was useful, certainly useful for me. And with that, it's a wrap on this leg of the Mutual Fund Show.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the long street deals, finance and policy news that could shape your tomorrow, the newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
एक ही लक्ष्य, नेशन फर्स्ट, एक ही इरादा, 2047 विकसित भारत।
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
People tend to borrow from their own resources to pay for their kids. The thinking, of course, is and look, this is an Indian concept, is that I take care of my kid now, my kid is going to take care of me down the line. Is that wrong though?
I don't think that today's generation thinks like this. Like today's generation who has kids in 20s, I'm saying, wants to live with their children. So here's what it is. You do that and then you're dependent on your kids, or you be selfish and try to figure out a balance, and then you're living life on your own terms. So I think it's really a question of, how do you want to have your future life, right? Where you may not necessarily be earning to pan out.
Listen to the are voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there.
Hello and welcome. This is Large Trades, a show in which we take you through all that is happening through bulk deals, block deals, and of course, volume buzzers of every kind. I am Agam Vakil. Before we get into the show, a quick look at how the markets are faring at this point in time. Weakness is what we are seeing at the moment, with the Nifty coming off by around 0.7% off day's lows, which we saw earlier in the session. But on the whole, it's turning out to be a day where we do have weakness. Let's take a look at the Bank Nifty as well. This index has been consolidating around the same mark for the past 3 to 4 hours, if I'm not mistaken. We saw an early knock off on the Bank Nifty earlier on in the day, and then since then we've seen a sideways movement there. And it's actually led to a lot of guesses as to whether or not it could eventually lead to a last-minute jump in any direction. That's going to be something that a lot of traders will keep an eye on, because it is a weekly options expiry for the Bank Nifty. It's going to be crucial. Do remember that option premiums have already gone down to next to nothing as far as this specific expiry is concerned. But we move on and talk about a handful of advances as far as the Nifty is concerned, and there aren't too many. In fact, while we do have advances for Asian Paints, HUL, something like an SBI Life, it's essentially M&M which is providing the bulk of your cuts. So of the 200 odd points that we're seeing on the decline for the Nifty, about a fifth of that is on account of M&M. And we're going to talk about M&M today, of course, in the show. Besides that, HDFC Bank and Reliance Industries to a certain extent weighing down on the index as well. But what about the broader markets? We're actually seeing a little bit of recovery in the broader markets on an intraday basis, because at one point in time we saw a sharp knock of nearly 2% on the mid-cap index, which is now down less than 1%. And the small cap index as well. The picture isn't very different. It is down by as much as 4%, but as you can see, it has recovered from that deep gash that we saw earlier on in the trading day. The question really is that what sort of stocks which are actually providing this volatility as far as your broader markets are concerned? Well, no better time than to introduce what we're going to talk about in the show today. Of course, right at the top, we're going to talk about the auto sector. Maruti Suzuki, yes, sure. But Mahindra and Mahindra, clearly the stock of the day, and perhaps not for the right reasons. It is under pressure right now. And a little later on, we're also going to address the railway stocks. But we start off with Mahindra and Mahindra. And for that, I have my colleagues, Puneet, Rucha and Varsha, who's joining us here to take us through all that has happened. Let's start off with the reasons why M&M is taking such a sharp knock. Puneet, over to you.
Yeah, thanks for that. So specifically, we have seen a very down day for M&M after a while, and there are potentially 4 key reasons that we think might be leading these particular losses. Right. The first is, of course, the waiting periods for some of its variants. Now, we've seen that over the last 12 to 18 months, the cars that Mahindra has been providing has been very well accepted in the market, but this has come at the cost of waiting periods of upwards of 8 to 12 months for one of their top variants. So XUV 700, the top variant, which has also, we will talk about this in the show as well, has a waiting period of roughly 8 to 9 months, and that's been the case ever since 2023 onwards. The second key reasons could, of course, be the complete absence of the company from the hybrid space. Now, we have seen the UP government notification which has come in this week, which will be waiving off the registration charges for hybrid vehicle. Now, Maruti Suzuki is definitely one of the key beneficiaries in this particular segment, but both Tata Motors and Mahindra are completely absent from this particular segment. And Mahindra and Mahindra is also, when speaking to us at NDTV Profit after the Q4 results, have highlighted that they don't see themselves entering into this particular space anytime soon. The third key reason for this particular fall could also be the production increasing per month. Now, it has gone up from roughly 39,000 vehicles to 49,000 vehicles in this particular year. But essentially, the demand for its products has been so very strong that it has not been able to reduce the waiting periods. Now, the newly launched 3XO, which was launched in April this particular year, the entry level, which is priced at around 7.5 lakhs, has a waiting period of roughly 32 weeks.
Right.
Now, for a car, essentially in that price band, it's very important for consumers to get the product early on. But such a large waiting period is, of course, a key factor. And the last one is, of course, price cuts. We will get into it. But we've seen that price cuts from both competitors is also giving the consumers an option now to get the car a bit faster from other players such as Tata Motors and Maruti as well.
Absolutely. And speaking of price cuts, Rucha, why don't you take us through that aspect here?
Right, Agam. So Tata Motors and Mahindra both have cut their prices.
Yeah.
Talking about Tata Motors, now Tata Motors have lowered its prices for the models between say 8 lakh to 16 to 17 lakh range of cars, and it has reduced the prices by up to 1.5 lakh rupees. Now Tata Motors SUV lineup in which this price cut is applicable includes cars like Punch, Nexon, Harrier and Safari. So it's a broad range of prices wherein Tata Motors has come out with a cut. Now, the company claims that this discount is a part of the King of SUVs campaign, and it also had recently achieved a production milestone of 20 lakh SUVs as well. But moving on to talking about Mahindra's price cut. Now, Mahindra has cut its price of XUV 700 top variant. So, this is just one model for which the company has cut its price, and the price cut is up to 2 lakh rupees. Now, this is a temporary price cut which will stay for another 4 months. Adding more to this aspect, the company had recently announced 2 new colors, taking the total options for customers up to 9. So this is what broadly we have on price cuts for both the companies.
Right, but Rucha, the price cuts for both these companies are across different segments. How does that play out?
So you're right, Agam. So Tata Motors have reduced the price range across its models, ranging from say 8 to 9 lakh, which has more of price-sensitive customers, and this can go up to 15 to 16 lakh models also, like Safari and Harrier, which includes a little bit of less price-sensitive customers. So while Mahindra has just reduced the price for the XUV model, so talking about XUV, people who are less price sensitive generally are in that range as compared to people who are in the 8 to 10 lakh range. So talking about volumes, we can see much more volumes for Tata Motors based on this price reduction than what we can see for Mahindra in the 20 lakh range.
Fair enough, point taken. But Puneet, it's not like the case for price cuts wasn't around given the high taxation on cars anyway. So why are the price cuts being taken now?
I think one of the major things to look at is, of course, the rising inventory levels across the industry. This has been a plaguing issue starting FY25 from April itself. And the car makers haven't helped themselves in this particular time frame as well with newer launches as well. But the consumers also is one of the key things that you should look at. Now, for Maruti specifically, we also saw from July onwards, generally is when they start taking some price cuts or start giving offers to consumers as well. And that has happened again. They've launched the Dream series, which has been continued from June. Now, this is, of course, a slightly cheaper variant of the entry-level cars such as Alto, Celerio. And one of the key things here is to give the consumers a better price point and entry to a segment which has been affected a lot. Now, when we look at, retails have also been affected in this particular time frame due to heat waves. The footfalls have fallen dramatically in May and June specifically, and the companies have highlighted that part in the monthly press releases as well for the sales numbers. Special pricing has been announced for entry-level cars, while the blended discounts for Maruti specifically have doubled from the Q3 levels, which is around Diwali of last year. Another one thing which we did talk about was the inventory levels. We've seen that from April, the inventory have gone up and almost gone up by roughly 50%. So essentially what we've done, we've taken a comparison of the retails which you and I as consumers would buy and the stock that they are keeping with the particular dealers. Now specifically for Maruti Suzuki, that's gone up from roughly 9,000 in April to 31,000 as you can see on your screen. So it's almost tripled in that part, although come down from May. specifically for Tata and Mahindra, they have been maintaining a similar range. For Tata Motors specifically, it's gone up from 15,000 to 17 to 18,000. That's the current inventory, which is with the dealers per month. And this is on a monthly chart that we are seeing, and similar range for Mahindra and Mahindra as well. So definitely the inventory is one of the key factors driving the pricing of the particular product and price cuts essentially in this particular matter.
Sure. But I take that point because, of course, production levels, and as Puneet just mentioned earlier, is something which is weighing down on these inventory levels as well. Varsha, at the end of the day, it comes down to what Street is making of these companies, right? So tell us a little more about what these broking houses are saying.
Yes, Agam. So if you see, MK has a note on UP hybrid tax cut, wherein they have maintained reduce on Maruti with a downside potential of 13%, while they have maintained add rating to M&M and Tata Motors with upside potential of 3% respectively. Now, this hybrid taxation, according to them, is a beneficiary, is a positive, which will bring them with the par with EVs, and Maruti will be a major beneficiary as there is no competition in hybrid as per. Also, they believe that these developments will improve Maruti's competitive position. But overall, if you see, the underlying PV industry metric remains weak, as the overall volume growth is expected to at 3 to 4% versus 7% last year. But M&M is expected to give a volume growth of almost 10 to 15%, while Citi has also given a note wherein they have maintained buy on Maruti with upside potential of 18%, and Maruti is actually a top sector pick for them, and they expect that it could see further upside to volumes if other states also follow.
All right. Well, of course, to put a little more, to give a little more context in these cases, is that we must remember that both these companies, specifically in this case Maruti Suzuki as well as M&M, do have a relatively strong order book at the moment. In fact, Maruti's order book stands around 2 lakh units. M&M, pardon me, that's where the order book stands around 2.2 lakh units. However, among the crucial points that we have addressed at this point in time is inventory levels, which are rising, and that's the reason why we have seen price cuts. But price cuts are across different segments for different companies. That also can lead to a little bit of pull and push with respect to the kind of segments and the kind of price segments that a lot of these companies are dealing with. That's something to keep an eye on. Of course, as right at the start of the conversation, Puneet has mentioned a lot of these factors which are playing against M&M. One, of course, also being the fact that its absence in the hybrid segment specifically. And if UP is an example to go by, and UP is a very large state with a substantially high populace as well as high demand, well, you never know how it could in fact pan out for a lot of states, and whether or not UP can in fact give the other states a queuing as well. Well, in that case, it certainly disadvantage M&M. I don't know if it is advantage its peers or no, but these are some of the factors that are playing out for the entire auto sector. Well, on that note, thanking all of you for joining us and taking us through these very, very crucial insights about the auto sector. We slip into a short break, and on the other side, we continue this conversation, but this time it's going to be on the railway sector. Back in just a bit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Lord Street deals, finance and policy news that could shape your tomorrow, the newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
एक ही लक्ष्य, नेशन फर्स्ट, एक ही इरादा, 2047 विकसित भारत।
So, there is good debt and bad debt. I think there's debt which helps you create assets, which we would classify as good debt. For example, if you take an education loan for something which is truly a good program, good course, which is going to take you further, I think that's good debt. It'll pay back. It will take some time, but it'll pay you back well. The problem is if you over leverage, if you take too much debt simply because you assume that the future is a replica of the past.
As Vishal just said, there's good sugar, there's bad sugar. Your good sugar is going to be from your fruit sources and stuff like that, right? And of course, then there's refined sugar, etc., which comes under your what's been labeled as bad sugar, right? So to come down and get into certain finance.
Welcome back to Large Trades. We're putting the spotlight on the railway sector today, but that's essentially because of one particular stock, and that's RVNL. Now, what's happened really here in this case is that it's advanced by another 9%. The crucial and perhaps an interesting thing here in RVNL is that it's not broken above its high it made, in the past couple of days, but it is still trading near days highs. So, and this is on very, very big volume. So if we can actually very quickly pull up the 5-day move on RVNL, we can perhaps get a better idea of how things have in fact paced. 5 days, the last 7 days. So there you have it. That's a 47% up move, if I'm not mistaken. Yeah, that's the kind of up move that we're seeing as far as RVNL is concerned. It's a 1 week return, and it's moving from strength to strength. Well, at one point in time, it was at somewhere around 450 rupees, even less than that, and now we suddenly have it's trading at around 600 rupees per share. That's as far as RVNL is concerned. But I have my colleagues here with me, Anushi and Mahima, who's going to join us to give us pros and cons with respect to this particular company belonging to this sector. So Anushi, let's start with you. What do you make of this?
So as you correctly mentioned, RVNL has been on a stupendous run. Yeah. If you look at its listing, there's a 19 rupee per share kind of a stock, and now to see it about this 500 rupee, it's a big run that we are seeing. In fact, just in this 1 year period itself, it's clocked in about 400% of gains. 1 month, 58% gain. So it's remained on the strong trajectory. But let's just look at the kind of performance it has over the time. So now if you look at its order book, so now the order book that they are expecting is about 1 lakh crore in FY25. So if you go back to certain periods, if you just go to FY23, they had about a 56,000 crore of an order book. So almost a double order book that we are seeing in these 2 years itself. Even the book to bill revenue, if you are mentioning, so from 2.76 times of a book to bill, it has grown to about 4.36 times. So strong trajectory coming on from the order book side. So what about you, Mahima? What do you think about this one?
Absolutely. So the order book looks definitely very strong, but the thing is that the revenue is not keeping pace with the kind of order book inflation that the kind of way the order book is inflated, overall. If we see just the revenue trajectory, the revenue has increased at a CAGR of 5% in the past 2 years versus 24% in the past 5 years. So in the past 2 years, the revenue growth has significantly come down, whereas they're guiding that in FY25 they'll reach an order book of 1 lakh crores. Right. At present, the revenues are around 21,000 crores. So if it continues to grow, and which the management has said that it will continue to grow at 5%. So if it continues to grow at 5%, the revenues will still be around that mark, whereas the order book will be around 1 lakh crore. So this is one of the reasons why I feel that the company needs to improve on its revenue growth as well.
I think I just want to come in on this one, because this is not just the problem with RVNL, and perhaps not a problem in general. A lot of these PSUs do have substantially high order books. The question comes down to execution, and if there isn't execution, the revenue recognition is relatively less as compared to your overall order book. So I reckon that at this point in time, and don't get me wrong, RVNL has just started getting a lot of these orders now. So the order flow now is considerably higher as compared to perhaps a year ago or 2 years ago. And that perhaps could be a reason why we haven't seen the revenues keep pace with the order book going forward. But that's not to say that they've been fairly consistent in their financial performance, right?
Absolutely. So I will just take it from here, what you've mentioned about the execution part, which remains on a concern. But go back to the history, go in the 5-year period. So you talked about the 2-year period itself, but overall, it's been a consistent trend for the company. 24% of revenue growth that we are looking at. Even PAT returns have been at a healthy 20%. So this on a 5-year basis, that kind of negates what it has done in the longer term in comparison with the shorter term period. Even if you have to look at the order book that they are showing now, which is about 1 lakh crore, most of the orders, as you mentioned, Agam, they are coming in from these last 2 years itself, and it's relatively making it at a faster pace. So, you can't completely throw the near term to the long term one again.
Absolutely, but just on a lighter note, when we talk about consistency, they've consistently maintained their margins, EBITDA margins also for 6% in the past 3 years, which is clearly not a good sign, right? At some point of time, the margins need to improve, with the kind of orders that they're getting. First thing, and secondly, they've also guided that they're expecting a 10 to 15% increase in their PAT, but they're saying that their revenues are going to increase only by 5%. So, this doesn't add up, to be very honest. With the kind of revenue growth and with the kind of, and plus yet their expenses have been growing at a CAGR of around 10%. So if you expect that the revenues and expenses will grow at the same rate, the PAT will not be able to grow anywhere between 10 to 15%. But this is about how the revenues and expenses are playing out, Manushi.
Yeah, so you mentioned that it has guided on this 5% revenue growth that you're seeing. Again, I'll come to this point. So the management had been pretty clear in their last 2 fiscal years itself that this is what the consolidation point is going to be for the business. 5%, that is what they're looking at. But going forward in FY25, they are expecting a stronger pickup in terms of their revenues, in terms of their bottom line. In fact, bottom line, they've mentioned about 10 to 15% of growth coming in. And now this would be on account of higher bidding projects. So this bidding projects that we are seeing, currently it makes up to 40% of their mix. And this is not something which was there before. It started about 2 years ago. And if you look at some of the bidding projects that they've had about 286 in total in FY24. And if you just take the main 3 in consideration, they had about 10% margins there. So now, if you are taking the whole consolidated 6% number here and the 10% number here, so there is the ramp up that we are expected to see going forward for the business. So strong emphasis on the profitability growth going forward.
Got it. But, at the end of the day, when it comes to stocks like RVNL, who have seen a significant run up, valuations is always, the talk of the town. And, if you just take the trailing PE at which RVNL is trading at present, it's around 77 times. And going forward also, if you see the estimates, FY25, it's around 74 times, and FY26 estimates is also around 66 times. So even 2 years down the line, valuation wise, the stock still looks expensive from an investor point of view, of course. And even if you compare it to the peers, like its nearest peer, which is Econ, is trading at a PE of around 32 times, which is almost half at which it's trading right now. So definitely it's one of the most expensive stocks when it comes to the entire railway pack.
Well, when was the last time you actually saw PSU companies trade at around 30 times, let alone 60 times? That's a pretty staggering number. But I reckon that the environment around PSUs has changed in general, given the work that the government is doing, the kind of capital expenditure that has been encouraged in sectors, and the kind of traction that PSUs are now taking on. Perhaps it is their time in the sun, but sure, in any case, earnings multiple, which is 66 times, 2 years down the line, it certainly does look like an expensive one.
So yes, well, there is this point about the valuation, which remains as a concern. Again, the kind of, despite the valuations that we see, the stock rally for all the PSU packs in general, it just brings it to the point where the investors are like, where are we seeing this going forward, despite the stock rally that is happening. And again, you mentioned about the budget allocation for this. So coming especially to the Ministry of Railway side, they have remained on the stronger side. So there has been a lot of emphasis over the years. So if you look at FY23 period, about 1.59 lakh crore of an budget allocation to the Ministry of Railways. Now that has grown to about 2.52 lakh crore in this interim budget. So in FY24, we saw about a 50% jump, and that's a big number. That's a big number to look at. And in this interim budget, again, a 6% growth over here. You know what's interesting over here is that if you go to the 2004-5 period, that was about 8,000 crore. So this 8,000 crore number turning into 2.52 lakh crore, it's a big number. And there's a lot happening in Ministry of Railways also. The focus continues to remain on Vande Bharat trains, the expansion of the port connectivities, more lines in focus, and yeah, so the outlook for railways continues on a positive side, and RVNL is a strong player in this one.
Absolutely, the focus definitely remains, considering the budget also coming in. I'm sure the allocation this time will probably be higher than that it was last time. Yeah. So I mean, just to understand how the stock works exactly, I just made a survey, and RVNL fell around 23% the day interim budget was from 1st of Feb to 12th of Feb when interim budget was announced, and it took almost 2 months till 30th of April to recover that 23%. Right. And similarly, even on the result date of elections, the stock fell around 13%, and every time the stock gets a significant order, the stock just runs up. So it's a pure sentimental play, Agam.
Right, well, absolutely. It is quite interesting because of late, in the kind of up move that I was pointing out to a little earlier in the show, about 45% up move in just about 5 sessions is something to reckon with. It's a cash market stock. That's quite a bit. But while on an investment basis, it trades at whatever valuations as it does, and we've just discussed that right now. The question really is that are traders looking at valuations? Of course not. There's no chance that they are. In fact, while they continue to say that you shouldn't catch a falling knife, I reckon that it wouldn't be a prudent idea to come in way of an up-moving rocket either. Which means that what I'm trying to say in this case is that it is going up at the moment, and perhaps for those who are holding on to the stock, it doesn't exactly make sense to perhaps sell that one. Well, on that note, once again, thanking both Anushi and Mahima for joining us and giving us so much more clarity on RVNL. With that, we get in Tushar to tell us more about M&M. Tushar, over to you.
Yeah, so thank you, Agam. So essentially, M&M has cleared the air on the price cut that we have, the share price discount, the share price decline that we have seen today, as well as the price cut that happened last night. So essentially, the company is saying that it's not to do with the UP hybrid taxation waiver that happened a couple of days ago on a circular dated 5th July. And it's not got to do with the unsold inventory as well. The company says the price cut is aimed at bringing down the average price of vehicles to propel growth. To that end, the company has already launched a variant of the AX5, that's the mid variant of the XUV 700. Now the price cut has been with the XUV 700, brings down the gap between the AX5 and the AX7 variants down to 2 lakh, which was earlier at about 4 lakh rupees. This is actually a celebratory pricing, that's what the company is saying, and it's for 4 months only. There's no concern of unsold demand, as what the company is saying. We also expect, they're saying that the new bookings for the XUV 700 are higher by 23%. That's what the company is claiming for the month of June. Apart from that, there are no impact of financials due to the XUV 700 price cut. Demand continues to be robust. So essentially, quashing all the media reports that we have seen so far on the concerns that may be behind the price cut. Agam.
Absolutely, and they certainly do address some of these concerns that we ourselves have raised. Well, Tushar, thank you so much for joining us and taking us through the latest update coming in from M&M. Of course, we continue the coverage on not just M&M but the auto sector as well. But on that note, we are completely out of time on this edition of Large Trades. But a lot of this discussion continues on the other side on India Market Close. Coming up next, stay tuned in, and we'll be back in just a bit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Long Street deals, finance and policy news that could shape your tomorrow, the newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
एक ही लक्ष्य, नेशन फर्स्ट, एक ही इरादा, 2047 विकसित भारत।
Specific PIN codes are not basically given insurance. Specific occupations are not provided insurance. People who do not have educational qualifications, undergraduate, are not provided insurance. So in short, term insurance is a very elite product for a country like India. Right?
Okay.
If you look at the percentage of people, when you cut down all these cuts, like when you put all these cuts into picture, it will not be even 1% of the population of India.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
People tend to borrow from their own resources to pay for their kids. The thinking, of course, is and look, this is an Indian concept, is that I take care of my kid now, my kid is going to take care of me down the line. Is that wrong though?
Strange are the ways of the market. 2 days on a trot when we spoke about how the very high likelihood quant indicators indicating there should be a corrective move. Markets didn't move. Just when we say that it's becoming difficult to call out tops, the market doesn't give way really, but about 0.6, 0.7% lower in trade. Mid caps and small caps also correcting in trade today, by the way. So the breadth overall is looking wobbly. The bank Nifty is down about 400 odd points as well in the session today. So large, mid, small across the board. We've seen a bit of a corrective move in the session today. The market breadth should be adverse, about 1:3 in favor of the declines. Not at the lowest point of the day, but yeah, circa there. Let's get the heat map up on the screen. A lot of red, very little green, but it's not as terrible. Like I said, it's not that everything is fallen apart. So there is strength in life insurance firms yet again. HDFC Life, SBI Life doing well for themselves. Pharma, as we've been saying, continues to see select buying, because today too, by the way, we have Divi's, we have Sun Pharma in the green. Asian Paints has notched up some serious gains today, 3.5% higher. Some strength for Adani Ports on the positive news flow around land resumption. But the losers take the cake today. Metals, to an extent, select IT names, and the big one, Mahindra and Mahindra. Conspicuous by its absence in the top 15 names is Maruti, because it's flattened out completely after being high in trade, just about 0.2%. So that stock has cooled off, Tamanna. But the pressure on Mahindra and Mahindra stays. The question only is this also a sign of consumption, even the high-end consumption, coming into some kind of a pressure? Or is it a very, very M&M specific issue? I think time will tell.
I think if I were to guess, between the two, it's an M&M issue as of now.
But household consumption too down about 7%. Household consumption down about 7% as well. There is at the margin, Tamanna, maybe some pressures.
Perhaps. But then I would say your FMCG pack not doing too